we're here for another Stocks to Watch episode here on Learn, Grow, Invest. So what we do in this series is that we take a look at what's currently happening in the marketplace, and we come up with a list of companies that we want to shortlist. And I say shortlist because naturally, as a channel that focuses on education, we can't give you stock picks. But what we can do is share our perspectives as to which companies we think may be interesting to take a look at, something that you may want to add to your own list of research or speak to your financial advisor about. But this is just for entertainment, education, and the like. So just sit back and enjoy, and feel free to participate in the conversation as we go. If you're watching this on the replay, be sure to leave in the comments which companies you're looking at for the few months ahead, and just let's get a conversation going in our community groups as well.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome back. Let us pray. Thank you, Lord, for this day. Thank you for the ability to produce wealth. We pray, Lord, that this will be a meaningful discussion, one that enriches everyone who participates. We thank you for this community in Jesus' name. Amen. So I have to say, let me actually try and find, I think I may have something here that's somewhat of a disclaimer. Let me just do this for completeness here. So anything that we're going to discuss here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any of the securities that we'll mention here today. This is just it's just an open discussion between analysts. And so I just wanted to set that stage. All right. So please join me in welcoming some lovely ladies here. We do have Matthew and Theon from Limitless who will be joining us later, but for now let's start with Jodian. Hi, Jody.
Hey, Jermaine. Hi, everyone.
Hi. And we have Deandra. Did I say that correctly?
I was correct. I was spot on.
Awesome. And Shauna K. Kelly.
Hi, Jermaine. Hi, everybody.
Right. So what I'm going to do, ladies, before we start, can you just say a little bit about your background, how long you've been investing, and just anything that you think would be relevant for us to know about you before we get into our discussion. So in the same way that you were brought on, I'll just ask you to go ahead and just say a few words about who you are.
Sure. Hi, I'm Jordan. I do work in investment banking. So I think I've been in this space for probably about 5 years. Yeah. I work as a financial institution currently, and I work in the research department. So pretty much my day-to-day is looking at what's happening in the macro space, what's happening more micro, and particularly looking at securities, whether it is local or international, or whether it is equities or fixed income, which is really where I would have focus on. So pretty much I'm able to join in the conversation, some based on my day-to-day, as well as just my general assessment of things.
Okay. And no cryptocurrencies?
No. I describe myself as more of a risk averse, passive type of buy, hold, old school type of person. So I mean, I would not venture into that space. Not by my internal own interest would not draw me to that space.
Okay, fair enough. All right.
All right. So similar to Jodian, I am an analyst at a financial institution. Don't have as much experience as her. I've been in this for about 5 months or so, but personally trading myself for the last 3 years.
Cool. Well, I mean that means you're kind of brand new to everything. So I think that perspective may actually be a good thing, because you're learning things from a maybe industry perspective, but maybe still thinking of things simple, because sometimes persons in the industry for many years speak a certain way. Maybe, everybody will understand you in terms of it being just, simple language. Not saying Jody doesn't speak simple language, for example. I'm just saying, All right, Shauna K.
All right, so my name is Shauna K. I'm a treasury professional. I've been in the industry for over 10 years. Since I've started in this industry, I've only been doing trading. I do some analyst work, but the extent of the analyst work is just to be able to move through my decisions quicker as opposed to waiting on another department to give me some info. But I mean, we do work with the analysts and we do have to wait on them, but as it is, I do a little bit of analyst work just to make my day flow quicker. For me, I would say I'm a risky investor. I'm one of those persons that will tell you that, I'm putting it all out there on the line. I mean, granted, I will do my research and I will ensure that, I dot my T's, dot my I's and cross my T's and do what it is that I need to do. And for me, it's one of those things where I say, okay, this is money that I can forget about and I will put it there and see what happens.
Okay, cool. I mean, for me, I take for granted that I'm known by our community members, but just in case somebody's watching this who is your first time viewing our channel, my background is, well, I've been investing since about 2016, 2017, thereabout. Self-taught for this, whole time. So I do say that back when I was a little bit younger, I was more aggressive in terms of risk taking. But the more years I've been married, now I'm a father. As my responsibilities have increased, I've become a little bit more moderate in terms of my risk taking. Meaning I can't go all in, unfortunately, because if I go all in and then I can't pay my mortgage, my wife is not gonna like that. So because our very first investment, we took our entire savings and put it in one company. And that was our first investment. I mean, it paid off, but it wasn't that's not something I would do now. Like I wouldn't take our entire savings and do that now. But I'm at a different stage. We do have a certain amount of things that we've accomplished. So I feel a little bit more comfortable in that what I am invested in, I'm comfortable whether or not, so whenever I've met my goal, I'm out, or just leaving it if it is that I can't touch it for some reason over the short to mid-term. And there are some type of investments that I make that I'm comfortable just leaving that maybe for my children, and it's good there. So I do understand the risk, meaning I do understand riskier investments. I think that there needs to be some sort of activity and volatility to be able to realize profit in the short term. If there's no volatility, then we don't make any money. And I do understand the perspective that we need to ensure that we don't go past a certain point in terms of risk, because you can't, even though it's money you can afford to lose, you don't necessarily want to be throwing your money away. So I do understand both perspectives, and on this channel we pretty much cover as many companies as we can. So I've been learning, what things make good companies, what things are, things to stay away from, or warning signs, so to speak. So that's kind of my background. So, all right, ladies, what we can do here is just, as you're led, let's kind of look at where things are now, because we do have an environment that is very interesting right now. And to add to that mix, we had a situation a few months ago that really impacted what I like to say investor confidence. We're yet to see the test of that confidence by a new offer coming to market the whole SSL saga that I'm referring to here. So I'm really curious to see, for example, what the take up of the next offer would be. I mean, a lot of things would go into that, the type of offer, the price, etc. But I'm curious to see the interest of the market. We saw an article, I think last week Monday, which mentioned there was a huge kind of sell off, from the market, maybe capital coming out to be redirected elsewhere. So those are some things that I'm looking at from my perspective, really just curious in terms of where the market's headspace is at. I haven't really touched any of my investments. I don't think I need to, but I am mindful of just cash, right? Because I'm seeing companies making certain moves where it's clear that they're prioritizing cash. Like you're not really seeing any major expenditures. Kind of seeing persons trying to either double down or partner or things that would maybe improve their position and not necessarily expose them. And I'm waiting to see, watching things in terms of like how interest rates are going. All of my margin loans rates have increased. All of my mortgages, personal loans, etc. Those are all up. The standard stuff that we've been seeing for a while. But I don't think the aim of things like increasing interest rates have had the effect that it should. I still see people buying houses. I still see people going to every single thing that they can at the end of the week. So I think we're going to be in this state a little bit longer, because what they want is for us not to spend. Once we continue to spend, rates will continue to go up until there's some form of slowdown there. But I do know that the inflation rate, I think it's going down. I don't remember the last number.
Yeah,
I saw Dr. King share something that I think it's headed there. So it's just an interesting time, I think. I don't know, who wants to add to that.
Well, I think what I'll say is that, you mentioned, the interest rates and all of that. So I think when you learn in economics, you kind of work in a space where all other things remain equal, but that's not real world. So I think even though typically you'd want to say, you increase interest rates and, persons should then curtail, you also have to factor in that you're coming out of a period where there was a little bit of restricted socialization. And so that would have factored in. So it's not like it was normal life going on and then you start to raise interest rates. So I think, a lot of the socialization that you'll still see happening is really just coming out of a period where you couldn't, and persons are returning or being a little bit more comfortable returning to that space. As well as it was a not normal period, so persons would have had wanting to do investments, persons would have wanted to be buying things, assets, house, car, and you probably didn't in COVID. So you probably were ready early 2020 and you delayed. And similarly with businesses, you're going into a period, you're not sure what is going to happen. So you were a little bit more reserved and you were holding on to cash. And so, once it is that you're in a period where things are returning to some amount of stability, you'll find that even though I noticed that there's a high interest rate, in a normal circumstances, it probably would have been a little bit more prohibitive, but I have been driving the old car for 2 additional years than I planned. So even though interest rates are now 7 and 8%, I really can't carry this 12-year-old car to 14 years, and what I would have typically do. So, had I been able to change it out 5 years ago, at this period I could have hold for additional 2 years and go 7. But a lot of those other conditions that would have factored. So it's just not in the normal sense, it's a lot of things happening. There are a lot of factors that come into play that has been impacting. I think probably what the central bank would say is that had it not been those measures, it would have been worse off. So even though it's not probably quite where we'd want it to be, their argument could very well be that had we not done this, it could not, it possibly would have been a much worse of a scenario that we'd be in now. And those are factors that play into the mind. And I think even as you mentioned, IPO, we may say that, because it has been missing from the market for a while, you could get that extra energy. Or it could be that, the timing. 'Cause I think what may have happened is that persons would have said, the timing just not right, and we delay a little bit and see what the market is doing. And so,
I think
it
everybody's
could be.
I think nobody wants to be the first IPO after SSL. I think everybody would prefer that somebody else goes and then they can be the one after that one.
I think, Jermaine, there's a little bit more at play because after the pandemic, what we've seen and what I'm seeing in terms of liquidity in the market, there was not really much liquidity. I mean, at some points, post recovery or post pandemic, we were seeing the market surviving on just $8 billion. The entire market working with $8 billion. No, let's put this in perspective. Sometime one institution will have liabilities maturing on a day for 8 billion, 10 billion, 15 billion, which means that the market was short. It means that, market participants had to go to the BOJ to borrow from the BOJ to meet their obligations, some of their obligations, if they could not find those funds in the market. Another thing too that we have to look at in terms of IPO, the stock market was going down. Persons are looking at it to say, if we do come with an IPO now, what are the odds that we're going to be successful? And nobody wants to do an IPO that is not successful. And further to what Jody was saying, in terms of interest rate, I'm looking at it from a different perspective, or I'm seeing it from a different perspective in that the interest rates, we're still seeing persons buying or spending even though interest rate is high. And what we need to remember is that interest rate is high for everybody, but not everybody feeling the pinch of interest rate, because what is happening is that even though banks are increasing our loans, whether it be mortgage, car loan, personal loan, whatever it is, what we're seeing is that the BOJ have moved about 6% since last year. And what we've seen is that the banks have hardly moved. I don't think any bank would have moved higher than 150 basis points. That's 1.5 percent interest rate. So what you're seeing is that these banks, they don't want to move first in terms of, increasing the interest rates on their loans, because one, that increases non-performing loans. Two, what it does is that they will lose market share, because when you increase your rates on your mortgage, your different kind of loans, what this will do is push your customers to others who have not decided to take.
If everybody's not raising it at the same time.
Right, and everybody will not raise it at the same time, because for the person who raise it first, they will lose customer share, and for the person who moves last, they will lose profit. So right, so I mean, the banks are on a knife edge to say, all right, we're gonna watch and see what happens. So everybody is watching everybody to see who moves first. And if you realize, no bank will tell you how much they're moving their interest rate by exactly. They give you a percentage, or they say, we're moving between this and that. They give you a range and say to contact your reps to find out, how much it is that they're moving it by, because they don't want to lose out on market share. When you advertise this, I mean, somebody will come out there and undercut you and steal your customers. So it's the dynamic, as Jody said, when we're learning econ, interest rate moves, all things considered flat. We have a dynamic market working with, and so I mean, we now have to take things from all different aspects of society and put them together and just try to make the decisions.
Okay. So before you go, Deandra, I was talking to Greg Lindo, who joined us last month for an episode, and he was mentioning the decrease in trading, in overall trading activity. I don't know if from where you guys sit, you're seeing something similar. Is that what you're seeing? Are you seeing less trading overall as well?
Yes, so I feel like with some GOJ bonds maturing too, persons are more looking into the bonds market, especially institutional investors. They're saying, boy, the stock market is not looking too hot. And I think the steam has died down a bit after the pandemic and people start going back out, doing what they're doing. They're saying, I don't want to put money into the stock market and it's not doing too hot. I'm not going to see the returns after 3 months like I was seeing back in 2019. So it's better to go into GOJ bonds where you're getting high interest rates, you're getting high yields.
Okay. So anyone else wanted to add anything there in terms of what you're seeing in overall trading? Is that so? For example, is that decrease? So further to what Deandra might have said, is that just a function of where we are? Meaning, is that something we can expect to improve over time once overall conditions improve, or is it because what I was concerned when I heard that, or one of the things I thought about, is it that persons are moving away from stock market investing and still investing in other things, or they're just saying, well, I have other priorities right now. I can't necessarily, I'm not getting the kind of returns from the stock market. Let me put it into something that can maybe give me an 8%, 9%, up to 12% we've seen. And then at least I can maybe hope to beat inflation and my money is not going below a certain point. Let me come back to the market when it's more favorable. I mean, what are your thoughts there?
I think it's a bit of both, but mostly I feel like persons are just doing other things with their money. They weren't able to do it for such a long time. And we're Jamaicans. If the world was ending tomorrow, we're gonna go out and party tonight. So we were not allowed to do that for a number of years. I think people are more just saying, I want to do other stuff with my money right now. Stock market is not looking too hot anyway. Can jump back in afterwards.
Okay.
Jermaine, read the article that you mentioned, the
Yeah, let me
stock
try and find
market,
it.
stock
Yes.
market losing 5 billion in market value.
Yes.
So it's not necessarily persons taking out $5 billion out of the market. What you're seeing is that, the decline of certain stock prices, such as I think Burrito. Burrito would have been one of those stock that would have lost some value. And if you multiply the stock price by the amount of stock that Burrito has, I think Burrito would have lost about $2 billion in terms of market value. So when reading the article, and doing some further research, I would have realized that basically what is happening here is that it's just stock prices coming down. Nobody is really in the stock market right now doing much activity, and so what you see happening is that the value of these stocks are coming down because nobody wants to buy. And so in an effort for buyers to get sellers, they now have to go below their reservation price, and in an effort to sell it. So that is where this article is coming from. In terms of in terms of what Jody mentioned, persons, keeping some funds to do whatever activities they want. That is in fact happening as well, because we saw when the GOJ matured the other day, we saw where 43 billion came in the market, and we saw where the government tried to come in the market at the same time to take out about 35 billion
Yeah.
thereabout. And we saw where a person said to the GOJ, we're not interested in your bonds. We're really not interested. The interest rates are nice, but I think that, we would be better served keeping our funds for something else, or persons have now been buying into the BOJ CDs. 30-day CDs are now yielding anywhere between 8.4 and 10 point, call it 11%. So persons are saying, okay, that's 30 days. These rates sound very high. Why should I invest my money for 10 years, 8 years, 20 years at these rates when I can be putting it in the BOJ CD that matures every 30 days or 28 days and move along?
Yeah.
I think you also need to factor in the dynamics of our market. I think it's not a big space. I think if you look at like a lot of companies, they're held. It's not like you look at how much they are very tightly held for a lot of them. So even though you may want to think that as a non-institutional investor, you may have interest, there's still a very little that you can do. And if it is that you're looking at, it is that persons are positioning for funds in a bear market sort of space, you can say to people that it's a bear market for so long, and so you find that even though if it is that they want to then reshape the portfolio, it's very hard to do so unless there's another institutional buyer on the other end. And I think some of the market dynamics that we have, as well as when it is that you're saying to retail clients, buy on the dip, and you say that for month one, then it's so nice, but by the time you reach month 12, month 14,
Well,
like I have
yeah,
no
man,
money.
buying the dip from 2020 till now, not looking so pretty. Not looking so
Right. So I
pretty at
think
all.
it becomes, and so there's somewhat of a pullback. So some of it is really how it is that you look at what's happening in the general space of the market and that sort of interest. And we'd have gotten a lot of persons coming in the market, a lot of interest during a bull period. And so it's a transition into seeing a different sort of cycle now versus what it is that you may have come into the market and seen. I think DeAndre was talking about it in 2019 when a lot of people came into the market. I mean, everything, it was just going up and
Yeah,
up.
man,
And
in 2019, you didn't have to think too hard. You just
yeah, yeah.
wait a
And
couple of
So I
weeks.
think we attracted a lot of short-term thinking
that is
coming into
Jody.
it. And so that's, that has played a lot into the activity that we see now.
Right, because adding to that, Jody, we know that the stock market is a long-term market play for most. This stock market, because we were the best stock market for I think 2 to 3
I
years
think
running.
2015, 2018, I think.
Yeah, man. So because of that, now every IPO that came into the market, you instant 100% return on your money, and I think that got a lot of retail investors, involved in the market, and now they're seeing that there's another side to the market where it's not always on the up and up, and so I think. As Jody said before, that you tell persons buy on the dip, buy on the dip. Now persons are realizing that, hello, this dip won't finish. So, I mean, if I have something else to do with my money, let me go and do it, because this dip don't look like it ending anytime soon.
Buy the dip 70 times 7, and you'll be fine.
I think that's easier said
Yeah, man, it is.
than
It is.
done.
It is. I mean, I say the example in our Telegram group all the time that there's opportunity cost, right? So buying the dip in context, because you can buy the dip true, but what was your original goal to begin with? Because for persons who were retiring in 2020, 2021, 2022, it's different than me who's retiring in a longer time period. So I mean, you always have to weigh whether or not it makes sense to take a brief loss or take a smaller loss as opposed to waiting it out, because you may not have the opportunity to wait it out. Because
Yeah.
I bit the bullet in 2020 for a few companies, made other investments, and I'm happy that I made that decision in 2020, because if I waited, I would have a longer
Recovery period.
exactly. So because at some point, and another thing I'll say to persons is, in these times, liquidity is important. So when you buy the dip, the idea is that you may go into losses. So if you have to sell, you don't have positive cash to be working with. So I mean, buying the dip may not suit you if it is that your goal is to be able to generate some positive cash. Just kind of things like that, just within context of what we're all talking about, because I do understand that we do have a mix in terms of perspectives, community members, etc. So I don't want everybody to feel like we're focusing on long term only, and we're forgetting that there are multiple ways to do it, right? All right, so I see Matthew backstage, and I see Thean as well, so I'll give them a chance to come on. hopefully they would have been hearing what we're discussing. They could just, add their take, and then we can go straight into our watch list. So Matthew, you're up.
Oh, hey, you hearing me?
Yeah, man, hearing you. Go ahead. So were you able to listen to what we're saying before, or do I need to get you up to
I
speed?
heard a part of it. I think you were talking about the like interest rates and
Oh,
how.
yeah. So what we're doing pretty much is just speaking about what we're seeing in terms of the realities of the environment now. So just from whatever your perspective is in terms of what you're seeing now, and then we're kind of preparing that to get into our watch list, because our watch list is going to come from what we are seeing, so we're just setting the context in terms of what we're seeing.
Mhm.
All right. So if
Okay.
you have anything you want to add to what we're saying, if you don't, then that's fine. I can just
No, I
kind of.
think something else. I think something you were pointing out was that as much as they're increasing interest rates, it doesn't really seem to be having the effect that I guess they want. But something else I think that's interesting to point out would be the public sector recompensation that's been going on. A lot of people have been getting one-off payments, and they are supposed to be getting increased monthly salaries. So if at the same time you are, trying to increase interest rates, but then you're giving some people millions of dollars
Yeah.
one-off money, and then you're also increasing their salaries by, I mean, I haven't, some of the numbers I've seen quoted 50% increase. It's not,
Hmm.
it's kind of hard because it's like you're doing contrasting things. You're giving people more money that is going to likely make them, like something that I was even thinking about from before it came out was that people are likely going to start buying more cars, apartments, because the money you're giving them will allow them to be able to pay down on a car, a house, and then the increased salary you're giving them is going to allow them to better be able to service that loan. So even if the interest rate on the loan has gone up, so the cash is more expensive, you're giving them more money. So it's a bit hard there. So I think it's gonna be kind of interesting to see what exactly happens with prices so far. And I think, I guess, as investors, our job is just to hedge our bets against that. Look for the companies that we think will be able to benefit from these changes that will be going down. Maybe that could be a car company that when these people get their money, they might start buying more cars. That car company might be able to profit from that. I don't know.
Okay. Okay.
Yeah, that's
All right.
just my 2
Interesting.
cents.
Interesting. Let me bring on Theon as well. I didn't see you. Sorry about that. Theon, how are you doing?
Hi everyone. What's going on? What's going on?
Hey.
Hi,
Good
hi.
night.
Okay. All right. So Theon, same thing that I just said to Matthew. What are you seeing now, and where do you think we are in terms of just just not just stock market, but economy in general? Anything that you feel worthy of calling out before we get into our watch list?
Well, I really and truly just agree with what Preston was saying too. I was kind of listening into everyone's take on the interest rates, the higher interest rates that's uh, okay, that kind of environment that's going on right now. I would love to see how this new, as Preston was saying, the public sector recompensation package, how is it going to affect the market? Because I have friends that have now opened up accounts recently. Like, I don't know if that's just bias because it's me and they know I invest and so on, or is it that they were always looking to invest, they now have a um, ton of money, and now they just say, okay, I have some disposable income, let me just do the right thing and invest. So it's a balancing act for the government, because if they really do want to temper inflation, rising interest rates, but as Preston says, giving people more money, it really and truly is a balancing act. I still do have a positive outlook on the market though, as we actually gave, Preston and I actually gave in our on the podcast, on the Limitless podcast, we we do have a decent outlook on the market as interest rates begin to decline, and more people are getting more money. So
So you think that the rates will continue to decline even though they're not going to be seeing the result that they're expecting to see?
I believe so, and I believe that it's almost like a lagging indicator to see the effects on the market. So when interest rates first started rising, we didn't see the effects immediately. So I think it's going to take some time for the effects to kick in of the lowering of the interest rates. So
I mean,
we'll see.
the effect that I'm waiting to see is my mortgage rates
Carlo?
going back down.
Oh,
Like, when does that happen? That's the part I'm
That won't
interested in.
happen as fast, that
yeah.
happens slower. So
Prices are
the rate
sticking
will.
downwards. They don't move as fast downwards as they do going up.
yeah.
That's business, Jermaine.
Mhm.
Yesterday's price is not today's
No,
price.
no, man, that because I mean, when I
Even do
look
you
at everything,
remember you remember gas when the gas prices globally were high, and then
yeah,
gas prices came down nicely globally. When Jamaica, they were still pretty high for a while. It took a while to
yeah,
come back down. So I don't think
yeah.
companies are too eager or too keen to drop their rates like that.
Yeah.
Guys, we have to take into consideration that there's always a lag, especially for interest rate, not for gas. I agree with you where gas is concerned. Um, but for interest rate, there is always a 6 month minimum lag. And I think that's why the BOJ has been actively out there in the market trying to reduce liquidity because the banks, as I said before, they are not willing to lose their customer base in order to increase rates. So, for instance, as at the 1st of April, we're seeing where the BOJ would have increased its cash reserve ratio to ensure that banks have less money to lend. On the US side, on the Jamaican dollar side, because they need persons to stop spending. On the topic of salary increase, um, I must say, Matthew, that some of these persons, teachers, for example, they were not getting a lot of funds. So they being able to get some funds now, it means that, yes, they might have a little more disposable income. Some of them, a lot of them, they're in debt and they're now trying to clear their way out of debt.
That's
And
that's what I was thinking. Like,
yeah, man,
wouldn't they
a
use the
lot,
money
a
to clear
lot
some
of
debt as well?
right, a lot of civil servants, they're indebted. If you talk to the own businesses, you'll hear that civil servants are their main clients. So, yes, there's a salary increase, but I think for most of our civil servants, I don't think that their salary increase will go to consumer goods or consumer items, but most clearing off debt, doing things that they needed to do. Yes, they might buy like maybe houses and cars, maybe, but because of what is happening now where the BOJ is restricting loans, the banks are going to be even more stringent on borrowers to ensure that whomever they give a loan to, that these persons will be able to service these loans so as not to push up their non-performing loans.
Yeah, yeah. All right. I mean, interesting times ahead, I'd say. Yeah, let's. I think we've given a fair background. So what we'll do, I think everybody knows the format, but I'll say it again for completeness. What we're gonna do is simple. We're gonna do, each person is gonna go around and say one asset that they're looking at for the, let's just say, the period forward, not necessarily the quarter, but something that they're adding to their watch list and why. Based on the number of persons that we have here, though, what I'll take is I'll I'll ask two persons to chime in, one to maybe support and add another perspective, and one, if it is that you have a bearish case for that company, you can say it. All right, hopefully that makes sense. So that way we get kind of a balance, and we don't necessarily have to go through every single person, and we can get because I don't want each person to share at least three if possible. but I do know that some persons may be dropping off early. So, let's just see how much we can go through. So it is gonna be ladies first, gentlemen. I'm sorry. So we're gonna start with Shauna K, and then we go to Jody Ann, and then DeAndre, and then we go from there. All right.
All right. For me, I don't have a stock pick. Reason being, I don't work closely with the stock market. I mean, I do invest from time to time for myself, but for me, I'm more okay with the fixed income market. And for me, what I'd say is for your viewers out there to buy into the GOJ Treasury bill. That's 90-day, 6 months, and sometime periodically 9 months. They can buy into these instruments. With an average yield of 8.1 for the 90 days, for the 180 days about 8.14, and no, for the 180 days it's 8.3, and for the 9 months we're looking at 8.35. If you want something long term, if you want something short term, you can buy into the BOJ CD, and that's done once weekly, every week. So there's an opportunity for you to buy in every week. Bear in mind though that for the BOJ CD, they do have a minimum buying amount, and that's $1 million. For the Treasury bill though, we have minimum buying of 5,000. So
Okay. All right.
yeah, right.
5,000 Jamaican dollars, right?
Right. So there's something, I have something for everybody. And the GOJ, Government of Jamaica, they do come with bonds from time to time. They will be coming up with some. I don't know if it's one. I don't know anything specific just yet, but I know according to their schedule, they should be coming later this month. So your viewers can reach out to their brokers and see what is out
So
there.
it's something that every broker offers.
Yes. I should think
No,
so. I think the minimums may be different.
no, and I don't think so, Jody. I think only DTIs, not DTIs, sorry, but oh, what's that word? Hold on.
All right. So
One,
it may not be fair to ask you if everybody covers it. Let me just probably put it this way, because Simone here is asking, how would you, for example, how would
you
you
have
start the
to
process?
go through a primary dealer. So if your
Okay.
broker is not a primary dealer, you have to find a primary dealer to go through. I'm not sure if the primary dealers are listed on the BOJ website, but you have to find a primary dealer. So not all brokers are primary dealers. I think there's just 8 or 9 primary dealers in this market. So you can find one and you can buy into these instruments through a primary dealer.
Okay. So let's say that my broker is a primary dealer. What do I do? Say, hey, I'm interested in this. They send me some information. I make sure I have the minimum, whatever the minimum is, and then that's it.
That they might give you some forms to fill out. They might charge you a fee. They might not charge you a fee. It depends on each house, investment house. But that's basically the gist of it.
Okay. And just kind of recap for persons what you said. So you mentioned, tell me the instruments you mentioned.
So
Just
you have BOJ CD, and that auction is done once a week, every week.
okay.
And that instrument is for 30 days.
Okay.
The average yield on that today is about 8.4. For the 90-day T-bill now, that's T-bills are done once a month. So sometimes it's just 90 and 180-day T-bill. And other times it's all three: 90 days, 6 months, and 9 months.
Okay.
And for the GOJ bonds, that's done periodically.
Okay.
Yeah.
All right. So I just wanted to kind of capture that. So if persons are asking, and I'll put it in the comments as well. All right, great. So you're saying for you, Shanake, you're not looking at any stocks in particular. You're going with fixed income, something that's a little less risky right now.
It's not just the less risky, but I mean, when you look at the yields on fixed income, these are higher than normal, what we're used to in the fixed income market. And I think that is one of the reasons why the stock market was booming this much over the years. You would have had a 30-day CD at 0.5%.
Oh,
Yeah. You would have had treasury
is that
bills.
legal?
Yes, it
Yeah.
is.
In a low interest rate environment.
Right. So
Oh my gosh.
that's where we're coming from. So persons are now realizing that, these good things are happening over there in fixed income market, and are now saying, let me cut my losses and move over and see how best I can get some gains on this side of the market. Granted, I think this is going to be short term because interest rates will be going down, maybe not for this year, but next year. So in the short term, you can, get some yields on this side of the fence.
So is it, and I'm sorry to be asking so many questions
Come on, go
instead of
ahead.
just, but I think the questions I'm asking will help those who are watching to understand it a little bit better. So is this expected to perform in the same way? So we mentioned, for example, some things may be lagging. So let's say that somebody would invest in this and it's the 9 month, right? Let's say that interest rate starts to go back down. Is that rate likely to change, or once you buying and the rate is fixed, it stays that way until the 9 months, or are those rates likely to change while I'm holding the asset?
Rates are fixed until maturity. So
Okay.
if you get it good, you get it good.
Okay. All right. Cool. So anyone want to add to that? Anyone in support? Any bear case, bull case, bear case?
I have a question. So I'm not really affair with fixed income assets and so on, but you're saying if I have $1 million and I put it in one of these CDs, you're saying after 30 days I will get the interest I would have accrued. I would have gotten 84 grand basically.
No.
How does it
Remember
work?
now,
Per annum.
per annum. So it's not
So you
Oh
okay?
my
Very good.
gosh.
right.
Yes.
Okay,
Yes.
Yes.
Remember, it's
Very
per
important point.
per
Very
hmm
important
annum.
point.
and you
Yes.
can't withdraw. This is
You can withdraw, however, it's at the discretion of your broker because they will have to buy it back from you. There's no active market
mm,
Ah,
for these instruments.
okay. Okay, cool. Thank you.
interesting. Cool. All right. So anyone want to add to
I
that?
think
I
I
mean,
can
so
add to a for in the sense that I think one of the things that you may hear is to hold cash. Why it is that you wait for opportunities in the market. So it is a good way on the shorter end to be holding your cash while it is that you wait for an opportunity, or you wait until there's another buzz. If it is that you're more afraid, that sort of thing. It provides that sort of opportunity to have it in not just a regular savings account, but an opportunity to
anything is
earn
better than a regular savings account at this point.
with the government. And then I think because it is that you're exposing yourself to a government security, it comes with a little bit more safety. Because governments are less likely to default. Not that they can't, but it comes with a little bit more reassurance in terms of
Yeah.
safety with these options in terms of the fixed income space. And it
Yeah. I
is very
mean,
reflective of what's happening in the market. So if it is that BOJ decides, um, you know, based on what's happening, we're going to raise rates, then you'll probably see that impact happening on the rates as well.
okay. Cool. So I'll make the bear case, and what I'll say here is that I just think it's something that on the pro side, I said I think it makes sense, especially if your approach to investing was either buy and hold or long term, 3 to 5 years, etc. Or you are investing for dividends, because I've always said it here, the dividend yield in Jamaica is terrible. So even at 8% per year, the average dividend yield on the market is somewhere between 2 to 4% or 1 to 3%. So if you are investing for dividends, then that is something that could replace that where you, because most of the stocks that pay dividends regularly, the quote unquote blue chip companies, their prices have been going down. So sure, the yields have been going up, but they're still not that attractive unless you are holding from like IPO, right? But what I will say on the bear side is it's opportunity cost, right? Because you now have to determine whether or not you can. There will be a cost to maybe pull those early if another opportunity comes up. So if you see something that could potentially give you more, I guess if you assess and you would pay fees and still recover and make a profit on whatever you're going to investing in, then it's worth it. But if you're not sure, then I just think that maybe a little you if that kind of yield excites you, great. Then I think you know that you're onto something there. If it's like, well, there's nothing better to do, so I'm gonna leave it there until something better comes up, then I think you'll know what to do when the time comes. So it doesn't really sound like a bear case. I'm just saying those are the two sides that I kind of think about for anything that says fixed income. Um, so yeah, I don't know if anybody wants to add anything to that. Okay. All right. So Jodian, you're up. Thank you, Shauna K. I think our viewers learned a lot a while ago, so I appreciate that.
All right. So I don't really have a. So I don't want to say it's a pick. It's something I'm watching, right? And
Yeah,
so why I'm watching it is really because the results came out, and I kind of joined the parallel with a similar company. So I was looking at Express Catering in terms that they would have released their results, and I've joined the parallel with the Nutsford Express. And so these would have been companies that were operating in the tourism space, which got a big hit during the pandemic period. And so, in anticipation of recovery, there may have been investors who bought in that sort of anticipation that once the recovery comes, we could see some amount of stock price appreciation. I think when it is that we looked at Nutsford, they had a really support price at around $8, like or around 750 there, about like it would not dip below that support level. And so once it is that those results came out, I think earlier this year, in terms of showing some amount of rebound in terms of their financial performance, that we saw that movement going up closer to $12. And so I'm looking at Express because it would have been a stock that was trading post pandemic or coming out of that dip period. I think around 4, 5, 6 thereabouts, and the results would have come out to show rebounding in some ways. I think they're expressing that they have record or the highest ever since inception for both profit and revenues, and that sort of improvement in terms of EPS
Yes, I
and stuff like
remember
that.
that.
And I think that you're seeing somewhat of a movement in the past 2 days in terms of the price. So that's one that I am watching to see if it has a similar trajectory to how it is that Nuts would have done in terms of returning to probably previous highs. So that's something I'm looking at. I think from a fundamental standpoint, the EPS, when you look at the PE and PB, those are still quite high. So that's why I'm saying it's not something that I am recommending, but I'm watching to see if it has that similar sort of bounce that are not what they did
Okay.
based on the rebounding and the plans that they have. So I think the positives for them is that we're seeing the movement in terms of their financial performance, albeit that they haven't done all of the expansion and plans that they have been expressing or that they are working on. So there's still some amount of room for them in terms of their capacity and what it is that the company could do based on the expansion plans.
All right, cool. Thank you, Jody. And anyone, any for, any against, or bull, bear case?
I think I have a bear case, speaking to the fact that they're doing well because the tourism industry is doing well. I think as we begin to see a lot of mass layoffs in the US and conditions are going to get worse, we're going to see a decrease in the number of tourists that are coming to Jamaica. And I think it's going to impact companies like this.
Okay. Interesting. All right. Anyone else want to add anything for ECL? I'd just say for ECL, I know that um, they're one of them that you think about in terms of when things are going well for tourism. I have never done like a deep look into the company, but I do agree actually with Deandra's point there, because I think so for example, I think I saw an article for Dolphin Cove today, kind of pointing to things going well for them. So I think in terms of tourism, right? Because we're seeing like main event having a great year, and all the companies related to either entertainment, tourism, that kind of thing. I think they'll do well. And I think what persons need to be mindful for, as with any other time, is to not overpay. Because if you buy at a certain high, and then now things start to now go back to where they were,
Yeah.
then you now have something that you're hoping that there is another high to come for you to at least get your money back, or you know so all right, cool. So Deandra, your time.
All
Deandra.
right. So my stock pick is Image Plus. I know German is not a fan of companies that
Ooh,
just IPO'd.
I'm not usually, but okay, okay. I'll allow
um,
it. I'll allow it.
I think I definitely like their management. They have three directors that have experience in the financial industry. So it's not just medical professionals. They have persons who understand business. I like that about them. They have a product that I believe is gonna be needed more and more, especially in our space where we have an aging population for one, and we're seeing a lot of persons with non-communicable diseases. I think demand for their products is just gonna go up, and I think they've done well to contain their expenses. So definitely something I'm watching.
Ah, okay, okay. I think I'll sit out this one. I'll sit, I'll sit out this one. So let's hear it, guys. Bull case, bear case for Image Plus.
I think you're gonna have to give me a bear case.
Well, yeah, yeah, I guess so. So I mean, actually, I would necessarily have a bear case for them. And the reason why I wouldn't have a bear case for them is so that they kind of, I wouldn't use the word controversy, right? But the thing about Image Plus that people talk about, at least in some circles, would have been the IPO price, right? Not everybody agreed that the price that the IPO that should have been their price. But of course, there are considerations like, was that fair value for the company? If you think it was fair value, then the price is the price, right? But I would say that they are put so. I'm waiting to do a versus video on our channel between Elite
Them and
and Image
Elite.
Plus, right? Because one could say, look at where Elite is trading, look at where Image Plus is trading, look at the revenues for both, profits for both. Like if you compare, um, in this case, apples to apples, right? Because the same industry, same company. Elite, so Image Plus is trading at $2.02 as at the end of today, and Elite is at 250, right? So if you make the assessment that Image Plus is considered undervalued in relation to Elite, then you have at least a 25% upside there, right?
Mhm.
Um, but I mean, I would just say it's, yeah. I don't want to say much else, and I can't say why. But I'm not the best person to give the bear case for that one.
Got you.
Matthew, Thean, I haven't heard from you guys yet. I mean, any thoughts?
Uh, well, I mean, you're looking at just the nominal value between Elite and Image Plus, but if you check like their PE and so on, I believe Image Plus would be has a much lower PE. I believe it's what $2 now, and I think when they came to market, they're around 13. Uh, that's the PE, maybe 13 or 14 thereabout. So I think Image Plus has a ways to go. I know a lot of people may have been, I don't know if disappointed is the word, because they would have come off the previous IPO highs of last year, like
Of a dollar, a dollar,
Sperry,
a dollar, a dollar. So I
dollar, yeah,
actually think, I think that the IPO price of a dollar should be banned
should be what?
because I think it should be
Some people
outlawed.
don't even have a reason.
You don't
I
want to
think
make
it shouldn't
money?
be allowed ever again because no, and I'll say that because people, for those who say that the price was incorrect or too high or whatever, they're not looking at it the right way. Because I could say, because especially like persons were buying shares at Palace as much as they could at 3 grand, and you don't want to pay $2 for a company that's generating positive cash when Palace wasn't. I'm not gonna go there, right? I'm just right. So I'll just say that.
I mean, there are other reasons too for the price being where it is. A lot of the IPOs, you okay, yes, retail plays a heavy role, but also you could set it up in a way where there is demand afterwards. And I'm not sure if Image Plus was set up in that particular way, So even there's certain IPOs where institutions would want to probably buy in afterwards or so on, or so or tighten up the reserve pool or make the float small, or there are lots of different things from a brokerage house level that you can do in order to increase demand post listing. But I'm not sure if that actually happened for. I don't think that happened
No, no,
for
no, no,
Image
no, no,
Plus.
no. So we were going into a conversation I didn't want to go into. People were
Okay,
complaining about allocation. You
Yeah,
got your
that's true.
allocation.
Location.
You
Yeah,
got your
that's true.
allocation, right?
facts. That is true.
30, almost 40%. So you
Mm-hmm.
asked, you say you weren't getting enough. People were complaining. You got enough, and all that I think did was show you what persons were really interested in, right? So it's almost like let me complain about something, you give it to me, and then I'm still not happy because that wasn't my issue to begin with, right?
Well,
But
yeah,
I'm
I
not
guess
gonna
that's
go
fair.
there. I'm
That's
not
fair.
gonna
That's
go
fair.
there.
We do have to
Not
go
gonna
there.
go
We do
there.
have to go there.
Not gonna go there. All right. So Deborah is adding a perspective saying not bear case for Image Plus, but not sure that the market is one that appreciates a business of this nature. And I think he's possibly right in that there are some companies, not just Image Plus, there are some companies I think people don't appreciate
Yeah.
for what they do. And we could probably have a segment just talking about companies like that. But
Mm-hmm.
I do agree because I thought for the type of company, for the quality of business, etc., I thought the price was a reasonable price, was fair price for what you're getting, for what you're buying, right? If you understood just how critical that service is to the country, a $2 per share to own a company that likely is going to be doing $1 billion in revenue on their next report versus some companies not doing $1 billion that you're paying a lot more for, not calling any name, right? I'm just saying, right? Um,
Shots. Yeah.
You know?
I guess they know who they are.
all right. So yeah, so for Image Plus, I guess the bear case, if any, further to what Deborah had said, it's just maybe persons may not appreciate. Actually, I think this is a valid point, right?
Mhm.
Persons may not appreciate it for what it truly is, and that could potentially go for both companies, right? So
Agreed.
both Image Plus and
And
Elite, and I
Elite.
do think there are some other companies, like for example, we could say that about the tech companies, right? Like One-on-One, L.E.A.R.N. I don't know if the market really appreciates those companies for what they are, right? So, all right, Theon, you can go next with your stock to watch.
Oh, wow, I actually wasn't ready. Um, Boy, there's so many companies I like on the market
So
right now.
I'll just say, as long as you don't mention, okay,
No, tell me what not to mention.
No,
Tell
I
me
was
what.
gonna say there are two companies that we don't cover on this channel.
Okay.
Okay.
I wish I knew which
Okay,
those were.
SVL Carreras.
Oh
As
yeah.
long as
Oh,
it's
definitely.
outside of those, we're good.
No problem. Okay, so let's pick a company that's hot in the market right now. A lot of talk, a few Gleaner articles about it's JFP actually. So I do like JFP. They were previously Jamaica Fiberglass Products. Now they're just JFP Limited.
Mhm.
Of course, they manufacture like furniture and so on, but for like offices, they also do a lot restaurants. They do for a lot in the hospitality industry as well, a lot of hotels. So, but I do like JFP for the recent deal I should say that's going on with Total Office. Don't know if you
What's
guys.
that? Is that deal gonna move the needle for them in terms of profits or anything like that?
I believe so. Definitely. So Total's a much, in my opinion, is a much bigger company than, and not even my opinion. Their revenues, I believe, were. I'm trying to remember right now. I think they did 7 million US last year for
Oh, okay.
revenues.
Because if you said seven
Um,
million Jamaican, that'd be
no. That's
that's not a
chump
big.
change. Yeah, so about 7 million, I believe US. Don't quote me on that though. But they are a much bigger. When I looked into it, they are a much bigger company than JFP, and I think it's beautiful for JFP in terms of the business synergies because now they have a much larger presence in the Caribbean. So they're in a lot of Caribbean islands currently. I think they're in Barbados, they're in Guyana, they're in quite a few spaces currently, all over the Caribbean. And so they distribute a lot of products, right? And they distribute for a company called Steelcase Inc. Steelcase Inc., I believe. They're listed on the NYSE. Yeah. So Steelcase Inc. Yes, and that's $1 billion US market cap company, almost $1 billion. So I believe that now the partnership is they're gonna get 30% in each company, right? Up to 30% in each company. So JFP will own 30% of Total Office. Total
Mhm.
Office will own about 30% of
Wait,
JFP.
it's total publicly listed.
No, private
No.
company too.
So
So
how
it's a
do we
Trinidad.
know how you mentioned some numbers in terms of what they were doing? What's the source of that info?
I'm almost sure
think there's
it's
an
a Gleaner
article.
article.
Oh, it
Yeah.
was an article. Okay. See if we
Yeah.
can
And
find the article and
they
share the link.
supposedly have plans to list on the JSE possibly
Mm.
this year.
Yeah, this year is
For
what the
total
article said.
office,
Yeah, man,
Mm.
total
Total
office. So
Office.
what they're gonna do? Cross list
I don't think it'll be cross-listed,
here in
No, I
I
think
think you
Trinidad.
they
want.
hinted more at IPO.
Yeah, the article said IPO.
Okay.
Let me see if I can find the article so I can drop it in the chat for everybody else to see.
So the
But
reason why I asked that,
I
right? So
found it.
if it's 30%, meaning 30% of the profits from them is gonna come over to JFP. Is that what's gonna be happening? I just want to be able to, I guess, visualize what's gonna happen now for JFP as a result of that partnership, right? What would it look like for JFP's results?
well, yes, and
As well as dividend.
as well as
Okay.
dividends. So all both of those and the synergy as well. So JFP now also will have a much larger distribution chain. So basically, they're buying into like a distribution company for their products, and
Okay.
they're, as I said, they have a large network. So I think when that deal is settled and so on, it should be immediately accretive to earnings. So we should see whenever that deal closes. I know the article says July of this year. So they're expecting it to close. We all know that things may take longer than actually slated, but the deal is expected to close in July. And both companies will
Okay.
be the largest shareholders in each other. So looks like a pretty. And we've have seen trades actually going on in JFP I think there were 3 block trades of like 80 odd million each seen last month, sometime in March. So I know things are going on right now. Um, so yeah,
Okay.
I'm pretty bullish on JFP, and the price is pretty. I mean,
So you're saying that the lumps should smooth out
the lumps
pretty
should
well.
smooth
I
out.
don't think so.
I believe the
I
lumps should.
disagree with that one, but okay.
What, the lumps
All right.
Yeah, I
smoothing
think
out?
the nature of the business is
Let's hear
lumpy.
it.
I think it's
Let's
just the
hear it.
nature of the business that it is lumpy.
Okay, I
So
agree
I
with that
mean,
because they do have some contracts that may be
yeah,
worth a lot more. So I agree. Yeah, I agree with
yeah.
you
So I
there.
don't know that you're gonna necessarily get rid of the lumpiness. I think that will stay. I think they do have good plans, what it is that they want to do, and as a being a smaller size company, it's not really a big, huge company. That the linking with other companies, forming partnerships is really good. I think, however, one of the things though for JFP is that it's still very much a contract business that you do heavy negotiation on, and so
And it takes long to close, like so
yeah,
you may get a deposit at the start, take 6 to 9 months for some projects, and then the customer may have now 60 to 90 days to pay.
yeah,
So I mean that's what causes the lumps, right? Because you commit your resources to a project, you close that project, and you may not see the gains on that or the
yeah.
return on that for a few quarters.
Yeah. And then it's competitive because you think about how it is that a company going into to want furniture or office equipment. There are other cheaper sources that you can source from that may not be of same quality or standard. And so you find that you have to be very competitive with that pricing. And so when it is that you're competitive in those spaces with pricing, it could mean that you're cutting things really thin. And so that is one of the things to watch with companies within that nature, in terms of how it is that they have to, in order to win deals, how much of a cut you need to take. So while there are positive steps being taken with the acquisition, I think I'm a little bit cautious just on the nature of the company and how it is that you have to go about in winning those deals. And you have a very competitive space in terms of cheaper materials that come, particularly out of China and that sort of space.
Yeah, and I think for them their costs are high, right? Like I haven't looked at. Let me try and bring up one of their reports before I'm lynched in the group, because I know I have some JFP fans. Um, but I think I've always had the impression that the company carries a high cost in terms of just cost of the persons that they work from, the persons that they work with, materials that they have to use, etc. So I'm trying to see. I wish I had some ratios up here. Okay, so I'm looking at fourth quarter results here.
I remember their fourth quarter had this one off. They had a big. They made a loss because they had to write off some inventory or
Oh
some
yeah,
other.
man. So I was actually more looking at the year, not the 12 months, because again, remember lumps, right? So we have
Okay,
to
fair.
look at more than one period. So I mean, um, admin expenses. So what I would do is probably what I would do, or what I would just be concerned about for this company is just management of those same expenses, right? Because I mean, I think arguably the more they do, and I guess that's reasonable to assume in terms of costs naturally goes up the more revenues you generate. But I think depending on the type of project, and so that they're working on the margin, the actually net margin from that job. I guess same thing to what Jody is saying. Like we may not see it always being that great of um, an added value, so to speak, especially the more competitive circles they get into. So the business itself may be growing, but I guess we'll see, right? So I see Lucian here saying that JFP, when I bring it up, JFP have not laid off anyone from COVID. They have the same staff. So if they got affected by anything, okay, I see what you're saying. So the pandemic would have come and they wouldn't have had needed to lay
Yeah.
off anybody, which means I guess um things only get better for them from here. I think that's what he's saying there. Simone, what do you mean by JFP needs to share the wealth? I'm not sure I'm following for that one. But I mean, the company itself, I think, in terms of their potential to grow, because if you look at 2021 to 2022, 233 to 476, that's more than 100% growth, right? Or just a little bit over 100%. So that's definitely good. But then when you look at, I mean, but I don't know what standard in terms of the industry, in terms of what's expected, because we don't have anything to compare it to. But I mean, yeah, I agree with Jody, is what I'll say. And let's see, and anyone with a bull case as well for JFP.
I think the total office deal will help with that lumpiness though, because how I see it is that
As in smooth it out for as we go.
Yeah, because they're gonna have a person who in a way is incentivized to basically buy from them, because if Total Office owns the stake in JFP, they can basically take some of their inventory off their hands, sell it. And then one of the things that you had also mentioned about in terms of JFP competing with China, China is still having there's still a lot of shipping issues. So there's delays with getting items, high shipping costs, and then for example JFP, there's some I think it's Caribbean Basin Initiative or something like that that allows JFP to actually export. I think it's duty free throughout the Caribbean. So that helps to actually make, that's one of the things that they had laid out in their prospectus that helps to make them actually very competitive.
Yeah.
And then the thing is, if you also go back to it, JFP basically does almost every restaurant that you can think of, JFP supplies. Even competitors, JFP supplies them. If JFP has been supplying KFC's branches, not even just KFC in Jamaica, they do like branches across different countries in the Caribbean, there's a high likelihood that, okay, if I did this branch in Kingston in Jamaica, I'm likely going to do this branch. So it's like they have a high, what's the term? They have a high amount of repeat customers. So I think the partnerships that they have already been establishing are going to continue to, reap well for them. So even the point that Theon mentioned for like the Q4, where they actually had to they had to write off a lot of the inventory because they were saying that I think the customer, there's basically an issue with maybe the item like it wasn't up to what the customer had wanted. They prioritize the relationship because they're like, okay, I can make a small loss right now, but for the next 5 years, this customer that I have now set up for, that will, pay me a lot in the end.
I mean, I get that, and so that's a good point, Matthew. But that also again presents another risk for the company in terms of just you may have that risk there, right? So inventory is there, items are there being produced, and then you have to wait this long period, not getting the return from that investment, and then because I mean I get that, and that's the right decision for them to have made. Maintain the relationship because the future value of that customer is greater than what you're giving up now. But that also to me presents risk in that inventory turnover may be an issue. And I'm saying that not knowing what the ratios are saying or anything like that. I'm just saying for I guess the type of materials that they provide, it's just it just kind of makes me, it feels like isn't it like specialized material and equipment where I can't necessarily just sell that to anybody. Like if they had a yard sale for that equipment or those,
they actually do have. I think they actually did have a yard sale recently. I saw it on their Instagram.
Yeah,
they are sometimes actually able to sell stuff.
Yeah. Okay.
So not for you.
I didn't say that. I didn't say that. It's just we'll see. We'll
Yeah,
see.
one to
All right.
watch. Another thing to, well, we were speaking about like tourism. Remember
Yeah.
JFP, one of their heavy, one of the largest sides of their business is the tourism industry. So if you look at it with the government has been, they've outlined a lot of plans about how many hotels they want to build. Even if you guys mentioned that, okay, JFP is a small company, and I agree, they're a growing company, they're still quite small, but they, with, if you look at even if they were to capture a small percentage of that business, like those hotels, some of them have thousands of rooms.
It's
If
supposed to be
JFP
what,
can
like
even,
8,000 rooms. Some articles say that are slated to come on board for the next couple of years. So
Yeah, man, I saw that somewhere. I think we covered that maybe in our previous stocks to watch.
mm-mm.
But again, it almost okay. So I guess the question that I'm asking here. So I don't know what 2020 had for them, right? But 476 million in revenues, 15 million in profit, just feels a little small to me. So for example, someone mentioned Simone was mentioning, she's asking about dividends, right? So if they did that, so let's say this year was an anomaly, right?
Mhm.
What would you be expecting, Matthew and Theon? So let's say they do double this 476 next year, right? And do the 952 million, and they make what, 30 million from that, 40 million, 50 million, like
I
at
mean, I
what
guess
point?
you're assuming their margins will be the same. You are looking at which one?
That's so I'm actually asking because I don't know, because I'm looking at what they did last year and what they did this year, and as I said, I don't know, because right, you wouldn't necessarily compare over 2 years. You'd be more looking at, let's say, 3 to 5. But I mean, one, I don't know how likely a dividend is for Simone. Um, and two, what would that dividend be, right? So I
Okay.
think I think
Um,
I think I'm just I think
All
I'm
right.
just
but
concerned about the
I,
margin.
okay, I understand your concern, but
Yeah.
if you look at, all right, look at the 9 months, and then look
Mm,
at the 12 months. The 9 months cost of sales is 116 mil, and then the
mhm.
12 months is 244 mil. So
Okay.
the margins, I think that one quarter is just that's really just a really bad quarter for them. That's a, you can tell they actually made a decent sized loss in that quarter particularly. So the cost of sales more than doubled in that one quarter
All right.
compared to the other
All right.
three
Hold on. Let
quarters.
me let me just do it this way, because I wasn't looking at the just the 2022 year, and I was looking at um 2021 and 2022 together. You understand what I mean? So I know they might have had Q4 being a certain that phone
Hmm.
is across here. So this is not what we're meant to do here.
Fair.
Let me keep it
We don't have to
moving.
go too granular.
Yeah,
Yeah,
but
we're
we
going
don't have
too
to do that. We
granular.
don't have to do that, right? But
Yeah.
wait.
yeah.
There's one other thing I'd like to say. Well, two other things. First off, I mean, you might like dividends, but I'm more a cap gains person. It really doesn't
Mhm.
matter to me the dividend that much. Yeah, it might be nice. Other thing, um, the whole lumpy revenue thing. How I see that is that that's actually
An
can be
opportunity.
good. Yeah, that actually can be kind of an opportunity, because if people are
That's some
expecting a
crackers,
very good
right?
report, people can be expecting a very good report.
Mhm.
um, you can use that to, make some cap gains. And then if the report isn't as good, people might, who are expecting that report to be very good, may be quite disappointed, and they may want to sell me their JFP shares at a much lower price. I might be willing to buy, because I know that they're likely to book a very large profit in their next coming deal. So, I
You're
mean,
assuming that the market will respond favorably to profits, because we know that the market rewards profitability.
well, I'd say how
I'm,
I see it
I'm
is that
messing
it
with you. I'm messing with you. I'm messing with you. With you. All right, so Matthew, since you're up now, you want to just say your company?
Okay. I mean, there's a lot of companies on the market right now that I like.
Yeah, choose
But
one, sir.
one, yeah, one that I feel like, well, I think it's actually one of your favorites. I don't know if you still like it. Trans Jamaica.
Ooh.
Oh
Yeah,
boy.
Trans Jam.
Okay. All right.
Trans Jam. They
All
have
right.
they completed their acquisition of JIO in
Mhm.
December, which they've actually outlined a lot of. They told you exactly how much money that they actually expect to save from this acquisition. I think they told us like 12, 12 million US per year. And
Mm-hmm.
if you actually
Ooh.
extrapolate that or put that into their reports and what the profits and the revenues that they make, that alone is a huge deal. Like their profits are going to actually skyrocket, and the acquisition completed December last year, so we actually haven't seen the report that will be due mid-May. Will be the first report where we actually see that reflected on their books.
Mm-hmm. Because
Other than that,
they had made a huge loss, that report, no? Like from the settlement
uh,
of the that
I am
JIO
checking
acquisition.
right now. I'm checking. I'm checking. I'm checking.
So from what I
Um,
remember, they made a decent sized loss, but that
yeah,
was just
I think
because of
their last
the
report
acquisition.
wasn't too hot. Yeah.
But it was mainly because of the acquisition. So they had to do like a settlement when they're acquiring JIO. But yeah,
Yeah.
continue,
I mean,
Preston.
the thing about Trans Jamaica, and I mean, everybody knows that I'm a shareholder. I don't think I'll ever not be a
a
shareholder of
happy
Trans
shareholder.
Jamaica. A very happy shareholder because I've gotten so much in dividends from 2020 that has probably overtaken my profit in many other companies, right? So if you just think about having volume, getting
Okay,
cash in
stunt on
terms
us,
of
Jermaine.
dividends each year that you
Okay,
can.
stunt on us,
So
Mr. Top 10.
anyway,
But
so
yeah,
next,
the other thing
yeah,
too.
they had a 7 million US loss, 7 million US
Mm,
loss for December for 2022. Yeah,
mm,
yeah.
yeah, but the other thing too, the highway, the other leg of the highway
The one
is
that's supposed to be
expected.
finishing. Yeah.
Yeah, I think it's the latest deadline they said was expected to finish in August, and that's gonna cut down the time from Kingston to Mandeville. So I think that's an added point of revenue and profit for them with the added cost savings from the acquisition that they're basically paying them that 12 million US per year. They're no longer gonna have to be paying them.
Yeah, because I
So that's
mean,
a
if
huge
they're
cost
saving
saving.
12 million US and they just lost 7, then there would be positive 5 already. If all things remain the same,
Mhm,
they're positive 5 this
mhm.
year.
And if you
That
look
means
at
they
it, the
would have actually
demand.
surpassed what they did in 2021.
Just look at the demand that we're seeing also. Like people are out and about, they're traveling a lot, using the highways a lot. So I think that will be very interesting. And then on the same point you mentioned, they actually do pay pretty good dividends too. I don't know exactly what the yield is, but they're
I
probably
mean,
one of the.
while the price is still low, the yield is attractive. I believe in their prospectus they mentioned where the dividend yield is supposed to be increasing over time. All right, so I think by next year the dividend yield is supposed to be going up, and then I think let me see if I can find that. But they did mention the dividend yield going up over time, which is one of the
Yeah.
things I found that was very very attractive as well because um, you know I mean I don't want to spend too long on it. I'm gonna try and find it. If I can't find it, then we
If
move
you're
on.
looking through the prospectus, that may take a
You
while.
have to search it, I guess,
Yeah.
control. The other thing too, the stock
Any bear case?
trades. Hold on, the stock also trades very heavily.
Heavy.
Like you can actually move. Like even I'm looking in the bike queue now, you can sell millions of dollars easily just tomorrow like that. So if Mr.
Yeah.
Jermaine wanted to exit his top 10, he could right
No,
now.
but that is also the reason I think why you don't necessarily see it moving up in terms of you're not going to see any large spikes in price because of that same volume that you're seeing. It's way too easy to exit, so you're not gonna see it go way down in price. You're not gonna see it go way up unless it's gonna be a steady build, right?
I mean, the price
Which
has been increasing in recent weeks.
I'm sure
I know,
It's
Jermaine
right?
from
knows.
I know,
from
He
oh
I
knows.
know,
He
well, of
knows.
I
course he
know,
knows. Mr. Top
I
10,
know.
he must know. You know, so it's what it closed at 156 today, coming
Mhm.
from 135 a couple
It
weeks ago.
spent most of last year at 120. It went up to 191 briefly, and then went back down. Yes, I mean, I'd love to hear a bear case though for the company to be balanced. I mean, anyone with a bear case for Trans Jamaica, be specific here. Jordan, you're
Jordan's
muted.
muted.
You're muted. Yeah.
Sorry about that. So I'm saying, I think one of the things, while as we look at, the financials and with zoning on profitability, that you also have to bear in mind that, for infrastructure type projects, that they do have at times very large capex. And so, in terms of how it is that plays out or how it looks in terms of some of the other ratios, and how it compares on an international space with companies in the similar space is something that we also need to factor in by looking at these companies, whether it is that they're, the cash flow statements, how is that going, the exiting of any debt and, adding additional debt to do any sort of other works that may be necessary when it is that we look at things that are more infrastructure type projects. Also just consider that into the mix and the discussion as well.
All right. So Jody, and I'll ask you to explain what Tanisha is asking. She's saying, what's the difference between the two Trans Jamaica Highway stocks that are listed? She doesn't know which one to choose. So I think there are three tickers that you may see, Tanisha. Trans Jamaica on the JMD side, Trans Jamaica on the USD side, and then Trans Jamaica 8%. Yeah, the per share. Can you explain the differences, Jordan?
So I think in terms of the two, I think the USD and the JMD, I think is really just the similar thing on both sides. So you can either trade it in if it is that you wanted to buy in US. So it's the same stock, it's just that you can buy it in JMD or you can buy it in USD. And then for the per share, that's a total different offering. So in terms of your equity exposure, if it is that you are buying direct shares into the company as an owner, that's a little bit different from if it is that you want to go in from a preference share. So that's a little bit in terms of it's a hybrid. So it is what they call equity and debt. So it is structured in some ways how it is that you structure a loan, but it also has features of equity. And so that's a little bit different. So there is more of a timeline in terms of when it is that will end. As opposed to equity, it's really more of when it is that you kind of can buy it to hold it into forever. So pref share one that you're seeing is really just more, it's debt, but it's like an equity. So it has features of equity. It also has features of debt. And then the other two would just be your regular equity, like you'd see a Fontana listed their common shares.
Okay, cool. All right, so did we before I forget, did we actually get into the bear case for Transjam? Okay, you have one, Deandra? Okay. I mean, so the only thing that I'd probably say, because I mean, full transparency, I think if you watched any video here for the past 18 months, you know I'm a shareholder, but the things that I think about in terms of risk for the company, so the good that I see is that I think they are able to increase rates at least once per year. Their product or whatever they're providing to customers is going to be relatively constant, right? It's the same flavor of road people getting, right? They do have to make repairs and some maintenance, etc. But I don't think, all things being equal, we're gonna be seeing, just like with every other sector recovering, we're gonna see recovery in terms of growth and consistency in revenues. Add to that the different legs that will open, add to that the cost savings, add to that them being able to I think match rates or raise rates from a US dollar perspective. I'm trying to remember how I heard that one going. Right? But the drawback I would say is that it's not really a stock that you peg for. Like, I think if you see cap gains for Trans Jamaica, it's gonna move similar to that, like a Seprod, where for maybe 10 months over the year you don't see anything, and then in like 2 months you may see go to get some real nice gains, and then it may rest again for a little bit. So I take it as that type of company. in terms of like it's not going to really it's not going to be exciting in terms of every other week there's a partnership, every other week, every other month maybe some acquisition talk. Like you're not going to have that with this type of company. So it's kind of it's almost acting like it's only been listed for a couple of years, but you'd almost consider it similar to a blue chip company. So it's not necessarily a bear case. I'm just kind of showing persons how to maybe look at it from the perspective that it's not the type of company that you expect to be flashy, right? So I just wanted to share that. I think that's fair, right? Am I wrong there, guys?
I think it may not be lumpy. Maybe have seasonality. These are different already. You have periods where you will see higher traffic than other periods. I think probably when you're out of school or something, you may have, let's say, you have seasonality. We can use that one instead of lumpy in this case.
There you go.
Roads kind of lumpy.
All right. So I think I'm up.
Did I steal your pick?
Yeah, I wasn't really planning to give a pick actually.
What? You have to give a pick. No, you can't come on here and it's your show. You don't give a pick.
I was hoping I could get away with that, right?
I'm sure your listeners want a pick, right, guys?
All right, so let me just
like the video if you guys want a pick from Jermaine.
Yes, I appreciate.
Now you have to do it.
So I would say, hold on. Let me actually. I'm gonna give 1 second here.
We're pulling out the portfolio.
Yes, I am actually. I am. So
I can see all the green reflected off your face.
I'll actually say if there's anybody who wants to go, and I can go after, because I think I really have to look at what's on my watch list, right? So what I would say, so for example,
You want Preston to go again? Oh, okay, good, great.
No, go ahead. What were you gonna say?
No. I thought you're gonna
I don't want to say a stock he's gonna say.
Yeah, facts. We already stole trans from it. Yeah, okay.
So I would say. So I don't normally pick stocks that are within their first year, because I think usually there's kind of like a IPO euphoria, and people can't really see reason, etc. But no, seriously, I would say because they're almost at a year now, or I think almost at a year. I think the company I'm gonna say, right? I don't know if I should say it.
I think you should.
I don't know if I should say it. All right. Let me say. So I think let me say Spur Tree, right? And I'll say Spur Tree because one, I think that I saw they had a really, really great run last year. I think that there's been some kind of cooling off of them. Meaning, what I see in terms of their potential to grow, especially overseas, would have had the partnership that they did recently. Well, not really recently. That was maybe 4 months ago now, 4 to 6 months. And I think that's gonna be maybe more of the same of what we see from them. Meaning, I take them as a type of company that, because they operate in a space that they might have competition, yes, but also opportunity to maybe take either a part of through partnership, or to simply just acquire maybe a company that is competing with them. I think that they do have good opportunity to grow, and I think where maybe let me actually so they're seeing some, I'm showing it here, where they're down 20% year to date. I think they spent most of last year hovering around $3 in the last 52 weeks, as much as $4.50, right? So they're down now, $4.50, $2, what, almost 40% overall. So I would say it's one to watch because I think they will continue to grow. Let me bring up their quarterlies here. So one of the things you look for example, with companies is, let me bring this up here. That wasn't my original pick, but I think this is a less controversial pick. I'll say that. All right. Because of course, immediately as I'm going to look at this report, say again?
So you want me to pick the controversial one for you?
No. So I was gonna say, I'm looking at, so this is, I mean, I was gonna say what came to mind for me is, I was gonna say something, but never mind. Right? So they did unaudited 12 months, 1 billion in revenues last year, a profit of 134. I think this is including their most recent acquisition, right? If I'm not mistaken. Right, I think so. Right? So I mean, it's and it's a company that everybody knows. No, it's not. It's not Dollar Financial. But yes, I mean, I think Spurtree just has great growth prospects, even for what they've done before. That $1 billion in revenue, to me, maybe for the year, depending on how it goes. I got the sense that, for example, even when we did the interview with them, that there were things that maybe were in the pipeline that weren't shared, right? It just gives you the feeling like it's that type of company where they're always seeking to grow and grow aggressively, which is what I like to say from a junior market company. And just the product being, it's not seasonal, right? The revenues aren't going to be seasonal, I think, right? If anything, they're going to be just looking at new regions to grow in, new partnerships to have, and it is just something that I think just has a great runway and roadmap for growth, right? But yeah, that's a bull case. Any bear case for Spurtree?
I think I have probably a additional bull. I think, well, probably not specifically for Spurtree, but just generally on the market. I think what we're seeing is that companies do the acquisitions, and I've discussed it with a coworker of mine, that companies do the acquisitions, and the disclosure and the information about these acquisitions is not as telling as you'd probably want.
I wish there was a law where they had to share all the details. Like, I need to know how much you bought the company for, how much because it's no, even if you acquire a private company, you are a public one, so we need full disclosure on that acquisition. I think that should have been a rule that's there.
Yeah, so I think that should be mine, because I know they would have done the Aki Cannon purchase.
Canco,
right.
Yeah.
And so, I mean, yes, it's aligned and we see the synergies, but it's also how was this deal done? And I think you see it for a lot of listed companies. Yes, it's good, it's aligned, but as an investor, you also want to have that, want to know that management made a fair purchase, and it's not necessarily that, they probably overpaid, or, there was, they could have done a better deal. So I think it's a general observation, I guess, in terms of just wanting to have a little bit more information in terms of the deals as they are done. To help in terms of shareholders or investors to make better decisions. So as yes, we see, it's adding in terms of the revenue, and we see adding to profitability, but is it banked?
But we don't know how much. Yeah, it's hard to do any forecasting. I agree, right? So we had Fesca on yesterday because I did a recent acquisition, and we couldn't get the details of that acquisition, right? And to me, it should be, I mean, they acquired a private company. So if they were acquiring a public company, then we could simply look at the public company's financials and we're set, but we don't have that. So I think it should be a requirement where if there's an acquisition, because essentially one could say as a publicly as an investor in a publicly listed company, you used my money as a shareholder to acquire another company, right? Because I'm part owner of that business. I should have the details in terms of transparency on that on a transaction. I
Agreed.
think that's
Yeah,
reasonable.
I don't think it's unreasonable to ask for more information, a lot more disclosure. I agree with you there.
Mhm.
Even in a lot of companies when they report, a lot of them don't break down a lot of the revenues and so
A
on.
lot of
And
the public companies are operating like they're private.
yeah, and
Yeah.
I would love if you have different divisions in your business, break down the
List
revenues.
all of them.
You
Revenues
know,
per division. Yep.
I
Agreed.
don't think it's too much to ask as a shareholder in the company. So I don't
No,
want to have
and
to
the thing
wait to the
is,
AGM to ask questions and so on.
so the interesting thing is, Theon, most of them already have that information because you
Hmm.
are. So, for example, if a company has multiple locations, I'd love to know sales by location as well. I think we saw Palace share that where they show how much each theater brings
Yeah.
in sales by concessionary, etc.
Yeah.
That's valuable information because it gives you the ability to project the company's future because you are investing in the future, not in the past. So
Mm.
yeah.
I would say a bear case against what you guys are saying is that I think the the real money is made for the people that are willing to do the work to like get the projections to try to find out, like, yeah, they won't tell you straight up how much they make, but there are ways that you can sometimes try to estimate it, and then the astute investor can do that, realize, wait, this acquisition is going to be amazing, the stock price hasn't been moving because it's not obvious to everyone else. I buy it, and then when it starts to be report and people actually realize, that's when I've already bought and I'm now selling to them. So as much as sometimes I
But
would
no,
want
but
more
Matthew,
information.
hold on. The
Hmm.
flaw in what you're saying there is that if that information is not shared by the company,
Hmm.
sure, depending on the industry, right? This may not apply for everybody. Depending on the industry, you may be able to maybe let's say that there is an acquisition for, let's say that somebody acquires let's say L.E.A.R.N acquires a company in the edtech space. We already have an idea as to what kind of revenues are generated in that space. So we can do an approximation because we have something, we have a listed example. But if there's not a
Hmm.
listed example, I think any projection or calculation is either going to be something that is a wild assumption. Meaning, to me, the way to narrow that projection is with hard data. If there's ways to get hard data that is not accessible to the public, how does the average shareholder make that projection? So so I'm not saying you can't do research, but what would that person be looking at or into that is not accessible to the public that they would have? So for example, if Jodian works in the in in the in the distribution industry that JFP works in, for example, she can say, well, I think that JFP can do easily X amount now because of their partnership with Total Office. Or if Theon worked at SOS, he could say, well, SOS can do X, and so I think the partnership makes sense. If you get where I'm going. So it shouldn't be rocket science for me to do certain projections of the company. Now there is added value for those persons who are willing to take the extra step and kind of do some form of projections. But how can you trust those projections if you don't have hard data, is what I'm saying.
And sometimes you just have to believe in a Jermaine. Like sometimes you won't know for sure, and you'll buy, and that's the
So
risk.
so
That's
so
the
you're so,
game.
so, so you're saying that there is a risk that you're doing projections that aren't backed by data, but
I'm not saying not backed by data, I'm saying that it may not be straightforward that I can say, oh, it's X amount of money. But what I'd say is that the amount of research that you can do, sometimes you can narrow that down to a point that you feel comfortable based on your risk tolerance, and you make the bet, you buy, you click buy, you sweat, you're scared, and it may or may not work out. That's the game. Like if that's, I'm not wronging you for doing that, because at the end of the day, it's everyone has their own risk tolerance. If I'm someone who I need to have everything perfectly laid out, I have to see the company report and the acquisition, I have to see all of this, then that's me, that's you, or
No, well, I
it's
mean,
just all our
I'm
preference.
actually that's not the perspective that I'm taking it from, because so for example, a company can make all the information available, and you as the investor still don't make the projection, so you have no idea what the future may look like, taking in context all the information that you can find about the company. So I think those are two different things, right? The added value or I guess greater returns are found by those investors willing to put in the work, full stop, right? Definitely agreed with you there. What we were talking about though was just simply companies, publicly listed companies, making more information available across the board. Like I shouldn't have to do past a certain amount of research to know the revenues you're generating from all of your subsidiaries or companies or departments, etc. Right? So that kind of thing, two different things. But yeah, I agree with the perspective that if you can put in the extra time, you will see greater value there. Clinton is saying you have to just trust the CEO. I have no problem trusting the CEO, but I'll tell you this. So I'll use a perfect example here, and sorry for the segue. You might have a situation, and this is why I think there's greater call for transparency. I may have Theon come on from Limitless, right? Limitless is listed. Theon comes on and said they're going to do a partnership with Learn, Grow, Invest. It's going to be one of their biggest partnerships ever. And it's going to come online some point this year. They can't tell me when. They can't tell me the value of the transaction. They can't tell me what it's supposed to reflect. All of 2023 passes. Theon comes on next year and says, well, the transaction didn't quite work out the way that we expected, and we're going another way. I'm not sure what trust I'll have in the CEO after that, right? You understand what I mean? Because you said something to me. I might have made an investment based on what you said, and then now we have this long gap, a time that passes, and then you come back, and we don't even know like what went wrong, why didn't it work out, what was the asking price for LGI. Like, you understand what I mean?
So it's the record date for the rights issue. Yeah, I understand. Yeah.
Listen, I'm not going there. No, I'm not going there. Right? I'm just saying that.
Yeah.
Because of the situation that we have in our market, a lot of times we can make decisions based on something that is theoretical, meaning it is something that you plan to happen, but it's not guaranteed that it's going to happen. And we find that those things have an impact on the market. I think more of an impact than it should, because of the fact that that's all we have to go off of.
Even when I was talking about the Gleaner article before with the JFP deal, supposedly it said the deal is supposed to close July, but
who knows? Who knows? It could be January 2024, exactly. And we don't hear anything else about it.
A lot of
things. The infamous summer with Jamaican teas. That was summer almost 2 years ago.
There you go. So,
or even something more recent like RPL in their prospectus that said Q1 2023. Some of the gas stations should be open, and to what I know,
so
they're still not open.
But
so you
RPL
can.
Is,
I'm not saying no. I'm just saying you can make projections. Things just don't go the way you expect.
And,
right?
and what they should do, what they should do based on what RPL did, is had a public platform to say we had challenges with customs, we had challenges with X.
Agreed.
Those projections are pushed back,
Hmm.
right? Who's next? I think I've kind of you
Jermaine just
guys just
asking
kind
for
of
some
throw
more
me off,
business.
and not having you guys on again. Very, very distracting. We can't focus on our stock picks, right?
This is probably the most fun episode ever.
Right, right. You see, you have Jojo asking about iCreate, right? Right. You see, Jojo, I don't know what to say to you. I don't know what to say to you. I can provide for you the email for the investor relations for iCreate. That's what I'll say. So let's take some comments here. Unbothered is asking about CFF. I'm trying to remember. Is that Caribbean fragrances? Okay,
Yeah.
Flavors and yeah.
Because I was asking what is CFF. I never remembered. Right? It's not a company you hear a lot about, right?
No.
I don't believe I've ever seen anything written in the paper, any interviews, like nothing.
I think detail probably gets more out of focus
Yeah.
John?
with that one.
Detail.
Detail, which would be
Their owner.
Yeah, I
So
think they're a
it gets probably a
subsidiary.
little bit more out of focus, as opposed
It's
to
the same owners?
Caribbean.
Yeah,
Yeah, CFF is a subsidiary, I believe, of Detail.
Oh, really? I
Yeah.
never knew that.
they're like a
I never knew
takeover bid.
Yeah, which
And
is
I
why
bought
when it is that they wanted when they're doing the APO. So I remember Detail did a huge raise for their APO, and it would have
a certain
effectively put them
tweeter
on.
reminds us of details
Yeah.
every day.
Yeah. So it would have put them on main market status. However, there's a rule that you can't have a company and a subsidiary once you're aligned being on two different markets. So you can't be on junior and one on main. So similar why Key had to move over to main because it was acquired by GK. So in that case, Caribbean Flavors would not have been able to, as they put it, be able to maintain the status that you would have had, or the fees or the expenses
You know,
that
still
come
had a
with being
tax
a
break.
main market company. So that's why Detail was allowed to stay as a junior market company when it is that it did its APO.
Okay, interesting. I may just look into them, but I'm afraid if I did that episode, nobody would watch it because I don't know. I don't know, honestly.
Time to do another stock split. That's the last time people cared about it.
You see what I'm talking about? Stop it.
Yeah,
let's
Preston and Tia need to remember that some people work in the market. It's our 9 to 5, and we don't want to lose a little work. So, spirit that in mind. Right there, Joe.
Fair.
Appreciate it.
NB, who are you
Thank you,
saying we should
NB.
ask back? Who are you saying we should ask back? You have a plan, but it's going in a slide. Oh my gosh. Who are you talking about, NB? Is that iCreate? Let me know. So by the way, I'll just say I'm not. So I've been an entrepreneur for a long time, right? So I understand business. I don't ever have an issue with a company saying we had this plan didn't work out, we're changing directions. I think that's natural.
Yeah.
But I think, and I see this in a real way, where there's almost a fear of, I don't want to say something, and then you're not happy with the result if what I said was gonna happen never happened. And I really wonder where that mindset or perspective came from, because I think or imagine that companies work on deals every day, and maybe half of them work out, or maybe 25% of them work out. That's normal. But it would actually help me to have more confidence in a company if you say, well, we're working on the partnership with Limitless, it didn't work out, but we're going in a different direction. We're looking at X, because it helps me to be confident if, as the leadership of the company, you're painting the vision as to where you're headed.
Yeah.
But if you don't paint the vision, I have no idea what I'm investing in. I'm just investing in a company that I maybe get as a recommendation
I agree.
from an advisor.
And I
So
think us as shareholders, we should speak up more about things like that. Whether it's on social media, whether it's at AGMs, we should talk to the senior staff, and because we have rights as shareholders, right? If you own a piece of the company, if you own common stock, you have voting rights, right? You have certain rights, so you should let the seniors know, hey, we'd love to see a bit more of this. We'd love to see a report a bit more. Love to see you out in the open. Some CEOs are very public, and I love that new trend where some CEOs are on social media, they're underground, they come on Learn, Grow, Invest, and Limitless, and they just talk to us and get the word out to the public. So I like that trend, and I think that's where a lot of the listed companies and their senior management and their CEOs should head. So yeah.
yeah, man, agreed. All right, so let's just do one more round, because I think we want to wrap up in about. Well, we really should be wrapping up now, but I think persons are enjoying the conversation, so we're gonna go for 30 minutes more, and let's just do one more round. So we're gonna keep it very
Let us
concise
speed
now.
run this time.
Leon and Matthew, no straying off the main topic.
Fair. We'll behave.
So we go through round two. So Jody, and what do you have in mind?
I was actually hoping that with so many people that we'd stuff, no one would be surprised.
So here's the thing. All right. So we can
I
do
think
this.
We can throw it out.
Because we can do outlook
Mhm.
in general for the next 30 minutes, where we don't necessarily state a company, we state industries that we're looking to maybe be on the rebound, or something that we expect that may be at play for the rest of the year. You want us to do that instead?
Sure, but I mean, I don't also have a problem with just talking about companies as well. You had
Yeah,
a
man, that's fine too.
you had a
That's fine
CEO
too.
on yesterday, Jermaine, right? Jeremy Barnes from Fesco. I do like Fesco. I think they're another one to watch. I don't know if you remember your last question to him. I think your last question was if you expected any more acquisitions for the LPG
That's
to
a
go
very
into the.
strategic question,
Oh, that's a brilliant question.
Yeah.
And he didn't necessarily. He didn't say no. He
Mm,
didn't really say yes either, right?
mm.
So I okay. So when you look at Wilson Beck, of course, as you said, they're private. You don't get to see how much money they spent and so on. But I highly doubt that you'd spend $1.7 billion on acquiring Wilson Beck's assets for LPG.
No. They
So
didn't say they
therefore,
spend 1.7
I
on
know,
Wilson Beck.
I know. So I'm saying they must have a ton of
Oh,
cash
you meaning spend
left over.
1.7 and then go ahead and yeah.
Yes. So it's just speculation here, but I believe that they will still acquire maybe another business. Right. There are other smaller players in the LPG market and their assets that they can acquire. I was looking into even well, there's I believe a lot of consolidation going on in that space right now. So IGL,
So
Gas Pro,
I
right?
mean,
So
I
I'm
think
oh
yeah.
okay. No, I
No,
was
go
just
ahead.
looking at other smaller players in the market. Even I was driving past like Draxal in Saint Anne, and I saw Texaco, and they have, I believe it's Texa Gas or Tex Gas or something. I can't
Text
remember
gas,
the
yeah.
name. Tex Gas. And I asked the worker, and they weren't, I don't know if they weren't selling any or so on. So I was wondering what was going on there. So I don't know. It looks like an opportunity for Fesco as well. I'm
Um yeah. So
oh
so
well.
Fesco does strike me as the type, so similar. So Fesco has the type of, at least just from what I've seen from them, they are bent and very determined on growing the brand and footprint of Fesco.
Hmm.
Like Fesco give the type of kind of vibe where they would, if they could, like create a monopoly, meaning
Yeah.
just like rebrand the entire country in Fesco gas stations.
Hmm.
Like I think it's just that just the kind of they have
They have a good brand presence.
they
And
seem
if
to
you
project
look on his
this kind of
shirt, you saw
yeah,
his shirt, he had Fesco and Fesgas. So
yeah,
you
man.
know they're pushing both LPG and automated fuel. So yeah, I agree. They have a really nice brand. They have a proper presence. Like I don't think there's anybody in Jamaica that doesn't know the brand Fesco. Right? People may not know like other smaller players, maybe like RPL or so on, because they're listed. I just had to mention them. But Fesco, like I think everybody knows Fesco. So I think they do have that strategy to be that number one player. They want to be very
Well,
competitive in the space.
yes, I mean, I don't think the well. The good thing is because before RPL listed, you only could speak about Fesco and you didn't really have anybody to compare them to. But I think it's interesting to see because I do see, for example, RPL has so RPL kind of strikes me as somebody who, well, RPL in terms of the company strikes as one of those who like to maybe work in the not necessarily work in the shadows, so to speak, but kind of sneak up in terms of just expanding their footprint in a similar way. Because there was hint of a partnership, if you notice, in the earnings call that we did with them. So I'm actually expecting to hear something from them to that regard, hopefully by the end of the year. Um, but I mean, I'd like to. I definitely don't think it's kind of fair to compare them both because like one just it's just different footprint, right? But on the same road. But yeah, I think Fesco is especially from where they're coming from. There is opportunity there. If you listen closely to what Jeremy said though, I'm expecting to see the impact of the investment and the acquisition to show on the next report because he kept on saying, we have, capital expenditure, we have to, he was kind of preparing you for, impact in terms of what we may see on that report based on what they would have done recently with the expectation that it may just be a bad quarter or a quarter that has not been trending on the same as the others, but that they're probably going to pick right up in the following quarter because they're likely going to be launching before September.
Mm-hmm.
Yeah.
Agreed. I mean, they're already selling. He said he's testing it, but
Yes.
people
Yes.
have
And that
fest
was
gas.
yeah. Yeah,
Mm-hmm.
man. All right. So all right. Who else we want to talk about, guys? I mean, I would just
Well, I
say
think I could
for
probably add to Fesco
great.
in terms
Thank
of,
you.
I guess, from the, always throwing cold water on people's optimism. In that you have to also strike the balance between growth and how it is that what's going to fuel that growth. How is it going to grow? What's going to be that cost of growth in terms of if it is that we're looking at a Fesco to become, a little bit more dominant, you're seeing more of them and expansion. Assets have to be funded, whether by debt or equity. So we also have to consider that side, and there's a cost to either one, whichever way it is that they choose to go. So, even though there is that option there for growth, it's also to look at how is it that growth is being funded, and what
Actually,
cost is it
actually
that that's
think
going to come.
actually think it's access to capital why they haven't grown faster. Because of that balance that they're probably trying to strike,
Yeah,
meaning if they could have probably borrowed more and still, because they seem to be again wanting to not necessarily um how do I say it? Meaning I think they're comfortable growing while still maintaining like a good balance sheet, good
yeah,
like they seem to want to manage those things carefully while growing. But I mean, again, they're just painting this picture that what they want to do is probably just take over every smaller company as best as they can, right? So,
yeah,
and it's interesting to note that if you look at their prospectus in terms of market share, they were small. So there's still like a lot of territory for them to overtake, and I think I would love to see both companies that are listed take over more of the private entities that exist so we can just kind of maybe see a greater view of the industry because we won't know the full state of the industry because so many other companies are private. if you understand what I mean. Like if they're doing those revenues and they have such a low market share, imagine what the entire industry is doing.
Jordan, you were saying about maybe access to capital or so on. I wanted to know if, because I know a lot of in the industry, you guys look at a lot of ratios. I know like debt to equity and so on, and their debt is high now. Like it's $1.7 billion that they took out in debt recently. And I'm not sure what the share capital is now. I'm not sure how much equity, but it would be under 500 mil. So, and I know like an acceptable range is maybe like 1 to 1.5 or so on. So do you think that they would take out more debt if they had the chance to? Let's say they had all the free cash possible, like, would it look I mean, it may not look as attractive. I don't know. What do you think?
So I think when we're doing the analysis, you look at, you also want to look at what is that premium that you're paying for the company. So when it is that you look at how it is that they're able to balance, because what it does is that the higher debt that you have is that it actually drains away from your profit there, because there's going to be that line item because you have to finance debt. So it actually pulls away if it is that you have unsustainable debt from what it is that shareholders will get, because you get at the bottom.
Yeah.
Whereas, if you're a bondholder, you get a little bit above that. So it actually impacts in terms of when it is that we're looking at the premium, what it is that it's taken away from shareholders. I think for each industry, it varies. So based on those that are a little bit more capital intensive, you may have a higher acceptable range for debt to equity, but you want to be able to be within a balance that you can manage what it is that you are adding on to your book. So you want to be in a space where it is not become burdensome. So I think if you think of a worst case scenario, it probably would have been back in the days when you look at like a Carib Cement that had all of this debt and there was nothing that was left for shareholders. And then, they got rid of that and it became a little bit more attractive. So you want to always be in a case where you have that sort of acceptable that you are able to manage. And I think one of the lessons that a lot of companies would have learned coming out of a pandemic is that, things are not always great. You want to be able to prepare for certain shocks. So if it is that there's a shock to your system and you have this high debt, then your ability to withstand or to recover, is impeded by having too much of that. So it is one of the things that you also want to look at the balance. You want to make sure that you're within industry standards, and you want to make sure that when you look at the other ratios in terms of your interest coverage, your ability to pay interest and what's left, and if it is that you're doing a lot for bondholders, and it means that you're getting less, in terms of what they have to pay out for dividend for shareholders.
Yeah.
So it is the contrast of the two that you want, that sort of healthy mix that makes it sustainable, that offers you opportunity to grow, as well as is also based on where the company is in its life cycle. So as you mentioned, it's more of a growth company, and those are likely to take on a little bit more risk in terms of these early years to do that expansion. But you don't want to grow too fast and you don't want to grow too slow. So it's always trying to find that sweet spot that makes it just right. And that's kind of hard to find. I think also when it is that we're doing acquisitions, that, it's good news and we like to hear the acquisitions, but we also have to bear in mind that there are teething pains that come with acquisitions, because you're merging two things together at some point in time, and that improvement and efficiency. And oftentimes when you're buying to something, you don't know fully what you're buying to. And I think you can think about it if it is that you buy a used car, you do all the checks and whatever, but the mechanic can't tell you that tomorrow, this going to go bad or it just go bad a day. So there are certain things that come with acquisitions that you have to build experience with over time. So as an investor, as from the analyst perspective, you don't necessarily want to be seeing too much acquisition happening too fast, because I want to be able to see how it is.
Jody, be careful.
You want to also be able to see how it is that a company handles something before it is that they go into our next one. So it's a process that you want to assess your company, particularly as they grow. And you're
really just throwing cold water on everybody.
I'm just saying you can't look at one side. So I'm not saying there isn't the positive. I'm just saying that you have to balance the positive with, I know that as a shareholder, what you want to see, is this, but then it comes at a cost. You have to have the trade-offs. That's just how life is.
Actually, yeah, I actually like that because, and I think that's a good kind of closing conversation to have, right? Because we're closing off in 15 minutes, definitely, right? Wherever we're at that point, we'll just close. But I'll just say that it's interesting that you raise that point because the market seems to love acquisitions, but it is like just kind of putting two companies together and you don't necessarily know how that will work out, right? So for example, there is a risk, especially if it doesn't, especially if it's an acquisition that didn't go through an extensive due diligence process to close. You could potentially be impeding the long-term growth of a company simply to do that acquisition. So I've always thought it's interesting where there has to be like a good balance. So for example, I think a good mixture is important, meaning if I see an opportunity for a company that can complement what I'm doing, then acquisition makes sense with those services, assets, etc. Then we can scale, good. But if it makes it appear that all you're doing or your growth strategy is acquisition, then that actually to me kind of presents, it puts a different spin on the company as opposed to one that's focused on both, right? Like you're growing the business and at the same time you see a strategic partner and then you just bring them in the fold kind of thing.
Oh, yeah. I mean, when it works well, it's beautiful.
Yeah.
It's just that on the other side that sometimes it may not go as great as planned.
But the market is not waiting for it to work well. The market is rewarding itself by pricing the company higher on the notice of the acquisition without that acquisition even bearing any fruit as yet.
Yeah, because they're buying into future, which is part of the nature of investing.
Yeah, but what if the acquisition don't work out?
Well, I think that's the risk that more speculative investors take on. I think for the people who are
Matthew's smiling right now. Look at him. Matthew's like, yeah, I will take those profits from you. Thank you.
Yeah,
that's
but
good.
I think for the more traditional people who probably are going into holding for a longer period of time, if it is that I'm buying at $5 to go to 10, if I'm buying, when I feel comfortable at 15 to go to 20, is for me or for that person a similar 5%, probably sort of appreciation, $5 appreciation. So it depends on your level of appetite and risk and what it is that you are comfortable, and also your age and stage in life. I mean, a pensioner may not be able to take on that sort of a risk at that point in time, whereas somebody who is new and fresher, a little bit younger without children, can say,
I'd love to
I'm
know.
jumping all in.
I don't know if you know, Jody, and the demographics of the market, meaning how many persons. So I'm probably making a really, like, I'm taking a dangerous step here, Leandro, by guessing your age. So I'm gonna say somebody young, like Leandro, who's probably like 22,
Gen
23,
Z.
versus somebody like
Yeah,
me with
Really.
second.
You're a little high.
I'm high. Wow. Okay. All right. So what's the makeup of the market, right? Because I was always interested in that because I don't know if, well, one, I've always wanted to know the number of participants because we see these 10,000 new investors invested in this company. In my mind, I'm like, it's probably Matthew with 20 accounts, Theon with 50 accounts. So is it really 10,000? Maybe it's really 5,000 by two. Each person uses two accounts. That's 10,000. It's not 10,000 new people. And then how do you know the makeup of the market? Like that's the kind of thing where I wish JSC would share with us, market data, demographic data, so we know what kind of landscape we're working. Because if I know that majority of the investors are Deandra's age, I'm gonna be taking like a YOLO approach to the market because Deandra is saying, I'm not investing for retirement. I need short-term gains.
Yeah.
But if most of them are my age who have, mortgages and children, then they're gonna be investing more conservatively if I knew that it would help how I invested.
Yeah, I mean, I think the best you'll probably, because then you also have to bear in mind that most of your market is also institutional investors as well as your pension funds and stuff like that. So I think probably if you try and look at, probably take a sample of 10 companies and you X out those and see what remains as the float, and how it trades, then probably you can get an idea, I guesstimate at best. But I don't know because there's so many other
I mean,
variables.
shouldn't that be public data though? Like, if a pension fund buys, shouldn't that be like there's a pension fund association which says, because shouldn't we know what our pensions are invested in anyway?
Well, it depends on, I mean, what you're saying in terms of you. If it is that you're a part of a company, then yes,
I
your
mean, like,
fund
yeah.
will
So
disclose
let's
to
say,
you.
so
But
for
then,
example, let's say broker A has a series of pension funds. Isn't it? Don't they send out? Let's say you know that your pension is a mixture of stocks and real estate. Don't they tell you we bought these stocks, or you just say, hey, your pension is now in negative, or it's more than what you had
so I think
done?
how it's set up is that you have a trustee. So you have a group that actively talks with your pension relationship person who will be sharing that information. So you'll be able to, from your group of trustees that you nominate, as a member of a pension, that they would then do that engaging, so they can ask whoever it is, their fund manager, what it is that you're buying, why you're not buying this, why was it this, why was it that. And so, if it is that you're not a trustee, you can always request that information. And so then that becomes public. But in terms of, the investment houses now sharing to say that I bought for this pension fund, then I don't think they are in the right
Yeah,
to do something like that.
I think that should be disclosed as well. I think that would give us again, it would rule out, because when I say a million shares at Trans Jamaica Trading, I may not know that that's on, right? But if pension fund A says we just bought that and it's sent to at least its circle of policy holders, then somebody from the Learn Grow Invest Telegram group can say, well, I saw where my pension fund this month bought Trans Jamaica. So that 1 million units you saw is from them. You know what I mean? Like, it would help give a different perspective to the market, and we'll understand some of what's happening. I don't know if from the broker side you actually see that data. I don't know if there's data that you see that maybe we don't see.
So in my position, probably not, but I think in other positions, but there's also the level of confidentiality with clients. So I mean, the broker wouldn't be able to disclose, that whomever did this, in the same
Why
way
not?
your
Why
broker
does
can
that
come
need to
out, the
be
same way your broker
confidential?
can come out and say,
A pension
this
fund, it should be
person.
confidential.
No, but your broker can't come out and say Jermaine did this. I mean, it can't come out and say that either. So I mean, it's just a client as well. So they wouldn't be able to disclose information, on behalf of their clients. So it is really the onus on you. So even if it is that
Okay,
you're a
okay,
listed
okay, okay. I see
company,
what you're saying, meaning the
connected
broker
parties,
wouldn't share that because
no,
their customer would be the fund itself.
right.
Okay, okay, I get what you're saying. No, but what I'm saying is, if the funds themselves notify their clients, then that word would still circulate in the Telegram group. So we'll know, if you understand what I mean. Meaning somebody would be made aware,
So I mean,
and
if it
that
is that
information.
say for I work at, Preston, Limited, and we have a pension fund and a trustee. I ask the trustee what we have, and then I, as a member, share that information, and that's different. But in terms of asking, the pension fund for Preston Investments or Preston Limited, to share that information, it also bears in that you're getting, what you call it now, you're paying a pension. So how it works is that they really pay a fund manager, to do this for them. So it's also
Yeah,
a
man, yeah, man,
competitive
yeah, man.
space. So in terms of if it is that you're going to go out and say, this particular fund advised me to buy whatever, then there's
Yeah, man, I
another
get you,
fund
I
that you
get you.
have.
Fair,
So there are
fair. I get you,
certain
I get you.
nuances with the disclosure.
Yeah, man, I get that. I was just saying, I think in general, just wishing that there was more transparency, because I was gonna say I had, but I have a pension fund. I'm not sure how it's being invested. I didn't know that I could ask and get the details. And so, I mean, I'm pretty much just like not knowing. So all I see from the perspective of the pensioner is that I have less money than what I started with. I know I'm in a pandemic, so I know the last 2 years are going to be skewed, but I have no idea what my money is invested in. It just says stocks, real estate, and maybe whatever else. So I don't know what if that person is buying Siboney with my pension fund. I don't know, so I think those things should be made kind of sent out since I'm a part of this fund. Say these were what we bought, this is how it performed, and this is what it resulted in
Well,
net
I
loss
mean,
for
you'd
your
have to want that for unit trusts as well, because unit trusts don't tell you what they buy. A lot of
I
them, you
know,
have no
I
idea
know,
what they're buying. So
yeah. And
yeah,
that's scary because I
that's
mean
why I
I
buy
don't
stocks.
know.
That's
I don't
honestly
because
why I prefer buying
yeah.
stocks over unit trusts, because I have no idea what they're taking my money and buying. Right? Some unit trusts, you see, a lot of them, like from depending on the years, they haven't been performing well. But if you can pick individuals, look at you.
Because
You
I
pick
mean,
Transjam. Transjam is up now. You're balling, right? It's $1.56 today,
I'm not very
right?
excited
And
for
I'm
the
pretty
weather.
sure your average price is below that. So, you know,
a little bit.
But I think
But
also
I
you have to
mean,
bear in mind that there for some persons, like just with anything in life, that you have a natural intuition towards. So, for example, you like investing, you have a natural affinity or drawn to it. I think probably if I think of myself and cars, even though I drive, I really don't have a natural interest in learning about cars. So for me, I would go to a mechanic, and I think mutual fund exists for those persons who may not have that sort of natural affinity to want to sit down
and I
and
get that,
learn a
Jody,
little bit more about
and
things. So it's probably
I
not
get.
designed for the savvy, but the not so non-savvy is probably a good tool.
No, man, but you see, even so, I agree with that point, but I still think you should know what is being bought on your behalf.
I think some
So,
do
so a
disclose
unit
like the top
trust should
10.
still say that, okay, unit trust A, or let's call it, um, LGI
Mhm.
equity fund, right? I still would like to know that LGI equity fund invested in Trans, Siboney, SSL, and one other company. So I know it's going to the moon. It's going to do really well. I don't have to worry, as opposed to it's just otherwise a number to me. You understand? That's
But I
it's
think some
it's
of that
arbitrary.
information is also available. I think when it is that you have that discussion, so I think probably the challenge with sharing probably a full list of what exists in a mutual fund is also you have to bear in mind that it's a competitive space, right? But if it is that I know some of them do disclose that probably the top 10, so you'll probably say that, you know, 8% is in this particular company and another 7 is in that one. And if it is that you have that discussion now with your advisor who is selling on behalf of that company, then they will be able to give you a little bit more details and probably won't be able to give you something printed, but they'll be able to share with you that, this is it, or this is some of the strategies that they're going to plan to take, why it is that, this would be a good thing, what it is, what is the div like on it, and that sort of thing. It's information that is available. I don't think that anybody would necessarily put it on like their website, the full on information, because of the competitive nature of the space. But I do know that some of them do share in terms of probably the top 10 that's available. But it's always information, it's better to ask and be told, we can't share. But sometimes you ask and you do get the information. So I think that would be my
Okay,
advice.
I get you. I get you, and I don't want you to think that I'm singling you out or anything like that. But I mean, I like transparency. I like
Yeah.
I'm buying unit trust A. These are at least even show me in a trailing way. Show me the last. Show me for the year past. You understand what I mean? Like show me what you did in 2021. If it's 2023 right now, 2024, show me what you did in 2022. So that way I can know when I'm looking at the history, because all I see, because you leave persons to judge unit trust, equity funds, etc., just show solely based on rate of return,
Yeah. But I
because
think
there's no other information to go on. Because real estate for one company one company may be investing in prime real estate in certain parishes, another person investing in properties that are maybe at in a certain parish, in a certain community that may not have the same value. You know what I mean? So it one
Yeah.
all real estate funds aren't the same.
Yeah, and I think as market shifts, as I said, a lot of us would have come in a bull market, and so it was easy to sell on just the growth that we have been seeing. So even though information may have been available because it's growing, I'd just be more easy to jump in. But I think as things shift, you probably get a little bit more questions in terms of how it is that now that my portfolio is going down, a little bit more questions that may come. And so you may find that you have to have a shift in terms of how it is that you're providing information, because people in this space now may want to have that information a little bit more than they did. So
Yeah, man. Once they're a part of LGI, they're going to ask what are they buying in. I mean, the most obvious thing, for example, if you had a fund and you see it's down X%, you could maybe assume that some blue chip companies are in there. Like I know a lot of funds at NCB, for example. So if you saw that drop, then you could safely assume that that's probably one of the reasons. But again, I think it's too much of a wild card. All right, so what we can do, guys, we're at the time, so I'll just ask each person to give kind of closing remarks in terms of what's one thing you'd kind of are looking for or that you'd love to see happen in the next few months. I'll leave it completely open to you, whatever you choose to say to close. Jody, you're on screen, so we'll start with you.
What I'm looking to see, I think we continue to watch the inflation, and in terms of what it is that central banks will continue to do in that space. So I think that is one of the key areas that I'm watching from a macro perspective to see what is happening there and the expectations. I know that there is a general optimism towards expectation for interest rates to come down. I think my timeline on that's maybe not the popular opinion in terms of the expectation for it coming down. But yeah, so I think that would be what I'm watching in the next couple of months. That
You think you'll be down by end of the year?
We're locally or
Yeah.
in the US. Well, so I think a lot of that hinges on a little bit of what happens in the US markets, and I don't think based on the tone of the Fed that we're getting lower rates in 2023. I think their tone has always been you could see that next year. And in our markets, you have to watch the difference between the two spaces. So, our movements have to be in consideration of whatever happens in our international space. So I think in terms of coming down, I think you'll see a lot of bits more holds as opposed to hikes.
Okay, cool. All right, Matthew, you're up. I know you're the one buying Siboney, by the way, so you have to mention them.
I'm not really gonna go into another company, but what I'd say is that as much as we can make predictions about what interest rates or where interest rates are going to go, I think a better way to think about it is that instead of trying to be reactive, you should just try to be proactive. We can't change interest rates. It can go up, it can go down, it can stay the same. Just try to invest in a way that, like, if you can invest in companies that aren't affected by interest rates rising as much, you can invest in companies that could benefit from that. It doesn't really matter where it's gonna go. Just try. You can't change it, so just try your best to invest, whichever way it goes. That's it.
Yeah, cool. Deandra.
I think I would agree with Jody, and I'm not sure when her timeline is, but generally I believe that interest rates are not coming down as early as a lot of persons are pricing in. So for me, kind of going with Matthew's strategy of just going with what I think will do well despite that environment.
Okay. One sec here. I just this comment from Stefan saying yet another episode of Stocks to Watch where he wishes he did econ. So I blame I blame, well, no, let me not blame anyone, but I mean, I would just say if you have questions, feel free to let us know. I think we've kept the language fairly simple. You may hear the word interest rates and maybe macro and micro and stuff like that, but I mean, really, literally, the words we use, if you think about it, you'll know exactly what it means. Um, but if you do have specific questions, just let us know. All right. All right, Theon, you're up.
Oh, I guess even in this high interest rate climate, I would still like to see a bit less hesitancy. So if brokerage houses are thinking maybe not list or so on, I'd say list, right? I still think there is demand in the market. Um, I can't remember what her name was that was on the chat in the chat before. I think her name was Shauna K. Was saying about like fixed income and so on, but I still think the market still has quite a bit more to offer. So as investors, I say now's the time to buy.
Are you saying that because you're invested in the same market?
Of course.
Okay.
But I'm also saying that as somebody that sees potential profit for a few of the companies and even companies that we've spoken about, companies you like as well, right? That they can do well because we're not buying the whole market. We're only investing in a couple of companies, a few companies, right? So you can still take your picks because some will go up, some will go down. So, but there will always be opportunity.
Okay. All right. Thanks, guys. So I believe I gave everybody a chance, right? I think so. Okay. So I'll say really, and this is kind of the perspective that I've had. I did a poll recently on Twitter where I was asking persons, are they still invested, are they holding cash, or both? I don't share the same optimism in the short term, meaning I do think less people are investing now. I do think that there is opportunity to make money now, but it's gonna be not as often as it was even last year, right? So I would say that there are still opportunities. I am still invested, but I'm not adding any new cash unless I think it's just like a really, really great opportunity. And I say great opportunity, thinking of the perspective that right now the concern that I have if I see something that's a really good price is wondering if next month it'll be a better price, right? And that's the challenge that I have because if next month is an even better price, what that is saying is that the price is low now, but next month it could be lower, and the next month after that it could be lower. So that's why I think some persons are saving cash because it is that maybe if I know that something is gonna be selling for $10 now, and I can buy it for $8 in 2 months. You could say, well, you don't know the future, buy at 10 and average down, or you could just wait 2 months with your cash, right? So it's that balance. Yard is making a good point here that it could be higher. That is true. So that's the same thing I was saying, where since you don't know the future, it could be 10 now and 2 months from now it's 12. But it's just that's the kind of that's the thing that I'm a little bit, so I'm not hesitant in the sense that I don't think, as I said, there are opportunities because I said, I mean, I'm in the space. I have the benefit of knowing and seeing things that like I get details through my just researching companies to review and etc. that I think sometimes market doesn't appreciate. So we spoke, for example, about JFP. A lot of persons may not even understand the impact of a lot of the moves that JFP is making or has been making, right? So those persons who aren't doing that sort of research won't know and appreciate what is to come. But then it also comes to mind that so remember we are expecting that at some point somebody will want to buy a company at a higher price than we're paying for it right now, because that's where we make our profit. There is no profit unless the price goes higher, right? So let me not go down that path. I'll just say I'm watching my cash flow. I'm looking at opportunities to maximize income where possible, and I'm actually looking for. I'm going to use this word very loosely. Diversifying my type of investments, and I'm not saying build a unit trust portfolio. I actually think that if you're a beginner, 4 to 6 I think is a good number for you. If you have 20 stocks, that's too much, and you need to kind of bring that down. Because if you're buying 20 stocks, you might as well look into the best performing fund, because the risk you take with 20 stocks is that 5 do really well and 15 and 5 do really poorly and the other 10 just don't move, right? And then you may be net worse, right? So yeah, I'll just leave it there for now. I think we had a great discussion, guys. We didn't do a lot of picks, but I think we kind of gave everybody, something to think about. So I really appreciate you guys being here, giving your input. I'll leave the links to everybody's contact in the description. Jodian, you see Jodian everywhere, so everybody knows Jodian in terms of I'll just say, right? So
Famous.
and Deandra as well is exclusively on Learn Grow Invest. You won't see her on any other platform. And Limitless, they're okay, right? You may or may not.
Wow.
You know,
Wow.
I'm kidding. Teon or Matthew, I'll give you guys an opportunity to share a little bit about Limitless. I'll give you a 30-second plug. Go ahead.
You want to go, Preston, or?
No, you can go.
Okay, sure. So Limitless, it's a podcast that both Preston and I do. We're both co-hosts. We have a lot of guests on, a lot of high net worth individuals. Jermaine was on last year. And yeah, we just talk about the market in an open, honest, in a real way. So if you guys like hearing us, you can follow us. We're limitless_pod on basically everything. And you'll find us on YouTube as well.
All right, cool. Yeah, man. So, guys, thanks again. I think that we'll try to. Well, we're never going to split this video. Let me just tell you from now. So, if you missed certain segments, just go ahead and rewatch. We'll try to do chapters. It depends on how it goes, honestly. But okay, yes. All right. So, yeah, Jodian, go ahead. I was actually gonna comment on it. So there's. Let me bring up the comment. So Tanisha is asking what's the ideal amount of stocks to focus on as a new investor. The reason why I said 4 to 6 is that all things being equal, the average person is gonna have a job, have maybe a family, maybe personal responsibilities, well, a family relationship, etc. So 4 to 6, I think if you do moderate level research, you can appropriately manage 4 to 6 companies in your portfolio reasonably well. Any more than that, you run the risk of not having the time to adequately research to know whether or not you are still making the right investment. So that's why I say 4 to 6. But I think Jodian had something she wanted to add to that.
Oh no, I was just saying that you mentioned diversification, and I think oftentimes you wonder, is there the possibility of over diversification, and that's a real thing. So I think
yes.
The consideration that's added, so diversification is really to reduce the risk. So I mean, if I have one thing and it goes really bad, then my whole thing goes bad. So you kind of diversify to say, if one go bad, then maybe I still have 2 more that did well. So it kind of balances things out. I think the conversation now around over diversification is that the addition of more stocks in my portfolio does not, the gain that I could possibly get or that possible return is not matched by the reduction in risk. So it's not that it's a paying off if it is that I add more. So even though I'm trying to reduce that risk, I could be reducing that risk and end up with a loss. So the idea is not that you want to focus so much on reducing risk that you're not making any money. And so I think that's the point with over diversification.
Yeah, man, agreed. So it's important that you appreciate the value of taking risk, right? You can't, if it's risk free or little to no, well, there's no risk free. If there's little to no risk, your upside is going to be very small. So to the point that Matthew was making earlier, like there's going to be some amount of assumption, call it speculation if you want to, that comes with with making a good investment decision. Like there will be unknowns, and that's okay. What you want to do is understand certain things or aspects about the investments where you are clear on what the risks are, even from the perspective that you want to understand. That's that same perspective that was shared. Like it could go in the opposite way that you're expecting, right? Great. I say the feedback, guys. Thank you, because I mean, the guys from Limitless were telling me to the shorter videos. So you guys saying that you enjoyed the discussion is showing them that long form content works. So I appreciate it.
Wait, read the number of stocks. I don't really necessarily agree with the 4 to 6. I think that might be a
That's
bit
too
too
much.
much. Yeah,
Look at
personally.
that.
What
Look at
I
that.
would say is that, well, everyone's number is different.
Yeah.
Mhm.
What I would say is that the least number of stocks that you feel comfortable having, that's what you should aim for. So for some people,
No, but
that's 2
Matthew, that's
stocks.
dangerous though. That's
No, I'm,
dangerous.
I'm
Let me
saying
tell
that
you why.
the one that you feel comfortable with, though.
No, but that's still dangerous, and I'll tell you why. Imagine a new investor, right? I went into a broker. They sent out their research paper, right? I read it and I said, okay, they sent me 20 companies. They seemed to like five, so I bought five, right? They told me to buy five. I bought the five. IPO comes, I buy the IPO. So I bought every IPO last year and the year before that. I have 15 companies in my portfolio. Understand what I mean? Because a lot of beginners, they just buy. They don't necessarily think about when to sell. Or they like the questions that I used to get so much on when we just started our YouTube channel. When do I sell? When do I sell? When do I sell? People don't necessarily, I think for a lot of people, it's easier to buy than to sell. Like they don't know when, even when they're in profit, they don't know when to sell. So you may run the risk of, so when you have a guide, like say 6, and you get to 8, you'll be like, okay, I need to think about consolidation. Which one may not have as good an upside? Because it's not that you can sell it and it still goes up, but will the upside be potentially as great for another company? So it's that same opportunity cost factor where I know that company may make money, but I'm thinking that this other company for my timeline, my goal, etc., would make a better investment for me. So I think a number is a nice guide because of those persons who, if they're not careful, just add companies and then over time they're running. Because again, you guys may not see it, but persons may share information with me to ask. Like persons will email us, ask. Person will be like, I have 25 stocks in my portfolio. I don't know what to do. Right. So, and I'm sure Jody and maybe sees that as well, where if a person is left to their own devices, they just it can go crazy.
Because like, you do get a lot of information coming from the public or everywhere, what to buy. But people
But
will,
nobody tells
I
you when to
like this,
sell.
and so yeah. So I think you'll be like, oh, are you trying to find what's next before everybody else, and so you probably end up with a little bit more than you would like.
Amen. So it's not like you, Matthew, where you're checking your portfolio every week, like you're listening to the CEO series and you're on the Twitter space, like you may be able to make daily decisions or weekly decisions, etc. The average person again is not going to be able to do that. The average person is probably going to watch this stocks to watch next month when some of the information that we may share may lose relevance by the time they watch it.
But doesn't that then make it harder when you go to the 4 to 6 companies? So if
Harder
you're
in
someone
what
with
way?
if you are someone with a very limited amount of time, and you're saying, oh, you should do a good amount of research in making your investments, making your stock picks. You should try to, not necessarily every day, every week, even if it's every month, every quarter, do some sort of checkup on that company. The more companies you are picking is the more time, in my view, if you are putting in adequate amount of research. So that's why I always go back to my principle. The least amount that I feel comfortable with, that I can do my whatever amount of research that I need to do to put my money in that stock, that's what I will do. So if that ends up being two companies and I'm putting my money in those two companies, it's very hard to sleep at night if you do not understand what those two companies are doing very
But
well.
the
So
danger in
then
one
that
or
then
two
pushes.
companies, yeah, the danger in one or two companies for a beginner is that may be too concentrated, right? Because if you're betting everything on Siboney and the sale doesn't
But
happen,
wait, why is it always
then
Symphony though? As
no, I use Siboney honestly because it's a company that one I'm not expecting anybody to take me seriously, so it's not going to be seen as a recommendation. That's why I'm using them, right? So let me just be clear on that.
Mhm.
Yes, Tavares, agreed, right? The best thing anybody can do is speak to an advisor. I just think as a benchmark, I think
Mhm.
4 to 6 is it's not it's concentration, but it still gives you, I think, a good mixture where you could choose multiple industries, multiple just kind of balance it out a little bit. Where 1 to 2 maybe a little bit. So if you are in one company waiting on a rights issue,
Mhm.
you're in a spot now,
Mhm.
right?
I'm not knocking that, but as I said, when I used to do that strategy, when I had the 4 to 6 or whatever companies, I didn't know why I was in these companies. I was just buying.
Yeah.
Um, it it like when I cut it down to my amount that I feel more comfortable in, I can honestly say, okay, this is the reason why I'm in this company. I can check up on that company, make sure that it's likely to reach my goal, and that's how
Yeah.
that's my personal investment philosophy that I
Yeah.
have got better success with, and it's the philosophy that I have seen lots of great investors also follow, that they have also got
You're
great
talking about
success
me,
with.
right?
So
You're talking about me.
I'm talking about Lee Chin.
Okay.
There's
Okay.
a
Okay.
clip that Theon and I think we had shared on our like Instagram. There was that
Mhm.
point in Lee Chin's life, that I think he was working at. I think it was when he was in Canada. He basically there was an interview, he was saying, oh, I heard, back in a few years ago, maybe 20, 30 years ago, when he was a lot younger, he was like, there was a time where, I heard you went very heavy into an investment. And Leachin said, I put all my money in one stock. And the investor was like, the interviewer was like, what? It's like one stock. And I understand that there's risk with that, but you understand
Yeah, I
that
think I saw that interview.
when you
Well, yeah,
put
man.
all your money in one stock, Jermaine, you cannot just sit down, put that money in one stack, and just go off and not really know what you're doing with that company.
Yeah.
A lot of your time and effort goes into researching that to make sure that that is the right pick. And as much research, and I am not knocking the fact that as much research as you put into it, there is always risk. What I'd find is that the amount of research you put into it can reduce your risk to an amount that you feel comfortable with. At the end of the day, it can pay off
Yeah.
quite heavily. So that's my investment philosophy based on my goals. And everyone has their own strategy. It might work with you. The 4 to 6 companies, not gonna knock that. But I guess that's the beauty of investing. We kind of all have our own strategy. We can all look back and say, okay, compare this strategy? Did this person get higher returns? Is this a better strategy for me? Try out new strategies, and that's the game.
Yeah. I get you. So I mean, so I don't want to lengthen the conversation, so I'll just say what we'll do. We'll take this up on another conversation, meaning I'll probably just do a video where we talk about the pros and cons of how many stocks you should hold and why. I think that'd make a good conversation, right? And I'm saying it here so that you guys can't steal the idea from me and have it on your podcast and not invite me. I'm just saying that, right? Um, so I think we can close it there. I'm doing a poll on Twitter now, guys. So I'll ask you to participate in the poll and and retweet it. I'd love to hear, can you comment below the video to let us know how many stocks you think you should hold in your portfolio? And I'm putting the context as in how many stocks you think you can appropriately manage, research. And so, yeah, let me know your thoughts. I see some persons already sharing in the comments. So, and we'll just take it up in another conversation. Thank you, Robert. Tell us what you have in mind, right? We need another program that is outside the top stocks. So the stocks to watch episode, if you notice, actually covers more than just the stocks to watch, right? Because we actually mix in a lot of conversations in it because it's really the only outlet. I thought about us just going live weekly, just talking about various things, but I find that you guys get the best value when it's multiple persons here and not just me, right? So yeah, we'll see how it goes. But thanks, guys. Really appreciate the time. My apologies to your loved ones who you could not be with to be here. So hopefully you're available for the next one that I invite you to. Take care. All right.
All right. Take care. Bye.
All right, guys. So thank you so much for being here. I think that was a good conversation. Thanks to everybody who shared their comments. Definitely good to see, the conversation going. Yeah, so just some things to be made aware of. Be sure to check out, if you have not yet subscribed to our newsletter, just be sure to subscribe to that. We're going to start sending out some emails again soon. We've just been kind of preparing for that. Yeah, our new website is going to be launching soon, so we'll share more details on that. So the current website is actually pulled down, and we're going to be working on it over the next few weeks. And the usual content you can expect. Be sure to follow us on Telegram. Let me share that link now. You're welcome to join our Telegram group. And yeah, I just really want to thank everyone, and I'll see you in the next video. Tavares, I'll ask you to post your comment underneath, and let's see if we can get a conversation going around it. But as I said, we'll use that as maybe the benchmark for another conversation, and I'll invite the same person so we can talk about that separately. All right. So thanks, guys. I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N. Grow Invest.